Hello friends, good morning to all of you. I am just checking guys whether the board is clearly visible to you, my voice is properly audible to you or not. And let me write something so that you guys can confirm. Okay, many people are saying it's visible, audible, and whatever I have written on the board that is also clearly visible to you guys. Okay, that's good. That's good. We have a couple of more minutes, guys. I think how many people we have in this batch? How many people we have in this batch, guys? Sumit said 150. Around 150 people are there. Okay, let's wait a couple of more minutes, right? So that other people can also join. Then we will start. In the meanwhile, guys, I'm just checking how many of you have actually applied Ind AS practically. How many of you have guys applied Ind AS practically? Rajneesh is saying not applied. Okay. Ashu is saying not applied. Abhishek is also saying not applied. Okay. Many people are saying not applied. One person is saying in the process of applying. Okay. What about others? 68 people have joined till now. Only 7 or 8 people have reverted. Ankur is saying not applied. Devesh is saying not applied. Okay. Ashok is saying NA. NA means what? Not applicable. Ashok, what is the meaning of NA? Not applied. Okay. Shreya is saying limited application. Okay. So I think most of the people have not applied in this batch. What I can figure out, most of the people have not applied. Okay. And guys, how are you finding these Ind AS? Difficult, complex, easy? What's your view on these Ind AS? Neerav is saying very complex. Okay. Okay. One person is saying easy, interesting, complex but logical. Certain AS are difficult, logical. So different views. Some people are saying complicated, some people are saying interesting, some people are saying easy, some people are saying logical but complex. Different views. Too much disclosures. Okay. And which Ind AS you find most difficult and most easy till now? Most difficult Ind AS and most easy Ind AS which you have found till now? Most difficult is 115 and 116. Rajnish is saying Ind AS 16 is easy. 103 is difficult. Easiest is SPPI. Okay. What about others? One person is saying leases are difficult. Okay, strange. If I'm hearing that Ind AS 116 is difficult, it's hard to digest. Manali is saying 32 is difficult till now. 32. Ind AS 32. Have you guys gone through Ind AS 32? So Manali is saying 32. Manali, which standard you are talking about? People are saying Ind AS 32, you have not gone. Right? So what is 32? Pankaj is saying, sir, I think today will be the most difficult class. Okay, very good. Ankur is saying graph of difficulty is going up day by day. Okay. Mohammed, Mr. Mohammed is saying Ind AS of financial instrument is lengthy and difficult. Okay. This will be more difficult today. Okay. Okay. So I think guys, you have some preconceived notion that today's class and tomorrow class, which is based on the financial instrument, that is going to be very hectic, very lengthy, very complex, right? So Rajneesh is also saying, sir, I am actually fearing from this standard. Okay. Okay. So guys, I think we have crossed 10, 10, 5 and 95 people have joined. So should we start now? Should we start now? Okay. Okay. So guys, let me introduce first. I am Amit Jain. I am working in one of the big four, right? Almost 15 years of experience in big four, including 3 years of articleship, 12 years of the post qualification experience. For the last 5, 7 years, I am practically working on Ind AS, IFRS, and US GAAP. Right, last 5, 7 years, I am also teaching CA students. I am also providing training to the big corporates, to CAG, to institute, and to other corporates as well. Right, so that's about my experience, guys. So today we have a session on financial instrument, right? Financial instrument. As I have got the understanding from you guys that you are actually fearful of hearing from this standard financial instrument, right? And secondly, what I have figured out that you have found that certain standards are most difficult. For example, most of the people have reverted to me that Ind AS 116 is most difficult standard. So believe me, guys, 116. Let me devote 1 or 2 minutes on 116. It's if a person is saying it's complex, it's hard to digest. It's a very interesting standard. It's a very simple standard, right? If my only suggestion to you, when we are reading any Ind AS accounting standard, when we are reading any Ind AS accounting standard, first read Indian GAAP accounting standard, right? Why Indian GAAP? Because Indian GAAP is our base. We are reading Indian GAAP since our class 11th when we have adopted commerce, right? We know we can correlate ourselves with the Indian GAAP accounting. And in a day-to-day basis, we are also dealing with the Indian GAAP accounting, right? And believe me, guys, if we are clear with the Indian GAAP accounting, Ind AS understanding, it's not a challenge. Ind AS understanding is not a challenge, right? So whenever you have any session on any standard, or whenever you are planning to read any Ind AS accounting standard, my only suggestion to you, read or go through the gist of Indian GAAP accounting, right? If you talk about leasing standard, go through Indian GAAP AS 19, right? Before Ind AS 116, read AS 19 first, understand what is the accounting principles. Don't go in detail, but try to understand by the help of the journal entries that what is there, what the standard is saying to do, right? As an accountant, as a chartered accountant, as an auditor, as a consultant, as an employee of the company, we understand journal entries. So we should have a good understanding what is the 2 or 3 or 5 or 7 journal entries we need to pass. If it's a finance lease, if it's an operating lease, if it's in the books of lessor, if it's in the books of the lessee, right? If you are clear with the Indian GAAP accounting, devote 2-3 hours. Ind AS 16 is only changing. Ind AS 116 is only changing a small one thing, which is accounting in the books of lessee. Apart from this, everything remains the same what we have read under AS 19, right? In Indian GAAP AS 19, right? So my only suggestion to you, before reading any Ind AS accounting standard, we should be very clear with the what is the accounting, what is the principle which is given under Indian GAAP, right? This is a rule for every standard. If you want to actually understand any Ind AS accounting standard, just understand Indian GAAP. This is a rule book. Okay. Second is we are going to have Ind AS accounting standard on financial instrument today, guys. Right. So people are fearful, right? So 1% Sumit is saying, sir, why to fear once we have qualified CA? Absolutely correct, right? We are going to read only financial instrument, right? Or let me clarify one more thing. These financial instrument, we have 3 standards on financial instrument under Ind AS, right? We used to have these similar accounting standard under Indian GAAP as well. If you remember, we used to have AS 30, AS 31, AS 32, which deals with the financial instrument. AS 30, 31, 32, which deals with the financial instrument, but those standards were never made mandatory by ICI. Those standards always remain optional for the company, voluntary for the company to adopt, but those standards have been withdrawn by ICAI in 2016 itself, right? Why ICAI withdrawn? ICAI said largely people are not applying these standards. Also, these are not mandatory standards, so we are withdrawing these standards. So from Indian GAAP, AS 30, 31, 32 introduced by ICAI, never made mandatory, always recommendatory, always voluntarily, and those have been withdrawn by ICAI, right? That means we don't have any financial instrument related standard under Indian GAAP, right? This is first point. Second point is, guys, when we are reading financial instrument, as I said, AS 30, 31, 32, similar to that, we have Ind AS 109, we have Ind AS 32, we have Ind AS 107, right? So we will talk about all the financial instrument, these standards today as well as tomorrow, right? The core principle, what we need to understand, the basic understanding of the financial instrument. If I say that I will cover everything, each and every part within today as well as tomorrow, today 4.5 hour session, tomorrow 4.5 hour session, that is not possible, right? What we need to do, we need to have a limited understanding, limited knowledge, so that we have a good grip on the basic accounting principles of the financial instrument, right? In multiple session, when I start the lecture, when I start the session, people start asking me questions which seems to be very complex. General public are not aware of those questions. Maybe, for example, compound financial instrument. Sir, what will happen in case of convertible preference share? Sir, what will happen in case of convertible debenture? Sir, what will happen which in the case of the redeemable debenture, redeemable bonds? So we are struggling to ride a bicycle, and we are talking about the how to ride a plane, right? So my only suggestion is, first of all, there should not be any fear in mind in respect of financial instrument. Go step by step. We will not use any PPT, right? Most of the things I will be writing on the board. We will be doing certain questions on the board itself, guys, right? And my only suggestion to you, two suggestions. One, keep preparing your coaching notes. It will help you to retain the concept for a longer time. Second, try to link whatever we are reading, try to link with your past knowledge or the existing knowledge which you guys are having, right? I will prove it that most of the things we already know, but we have never thought it in that direction, right? We have never thought it in that vision, right? So we need to broaden our vision today in respect of what we know and what the standard setter has done in respect of the financial instrument. Right, guys? Are you with me now? Should we start the standard? Yes or no, guys? Okay, most of the people are saying yes, sir, we should start. Okay, guys. Financial instrument, right? Before starting again, Ind AS 109, 32, Ind AS 107, I will provide you some sort of background history of these standards. Initially, these standards have been introduced by ISB, right? What is ISB? International Accounting Standard Board. So these standards have been issued around in 2014 or 2015, but globally this standard is going to be applicable from 1st January 2018, right? Or I would say this standard have been applied from 1st January 2018 globally. Wherever we are following IFRS, in the across the globe, we are following largely IFRS. In the US, we are following US GAAP, right? So largely across the globe, where the companies are following IFRS, they have adopted IFRS 9 from 1st January 2018. Correct. But in India, what has happened? We have introduced Ind AS in the year 2016 and 17, right? So we said phase one company who is supposed to prepare the financial statement for the year ended 31st March 2017 with a comparative year 31st March 2016 and with the opening date or the transition date 1st April 2015, right? So for the phase one companies, we said Ind AS is applicable in the year 2017, in the year 2016, as well as they have to prepare or recast their balance sheet starting from 1st April 2015. So that means virtually we have applied Ind AS 109, Ind AS 32, Ind AS 107 starting from 1st April 2015 in India. Global applicability 1st January 2018. Indian applicability 1st April 2015. That means it was a first time, it was happening for the first time across the globe that a standard has been issued by the globe but has been applied by Indian companies in India prior to the global application. Not only the application of the standard, but also Indian companies have practically and successfully applied these standards in India prior to the global application. That means when we as an Indian applying these standards in India in the year 2016-17, starting from 1st April 2015, we were not having any precedence that how to apply these standards. But still, we have closed 31st March 17, we have closed 31st March 18, 19, 20, and 21 is in the process. That means we have successfully applied these standards without any having precedence from the global perspective. Right? So that is what the history, what we have done in India, what we have achieved in India without any precedence, without any global application of these standards. Right? Second point, these standards are applicable retrospectively. Right? I'm not only talking about Ind AS 109, 32 to 107. I am talking about all Ind AS accounting standards. 39 accounting standards we are having. All standards are applicable retrospectively. Very important word, retrospectively. Very important to understand what is the meaning of retrospectively. Right? So guys, I hope you have attended lots of sessions. So can any one of you tell me what is the meaning of retrospective application? Can you tell me what is the meaning of retrospective application? Because we will be using these words multiple times in our standard in the today's session as well as the tomorrow session. If we don't understand the literal meaning of retrospective application, we will lose something in between. So Sumit is saying, sir, from the past period. What about others? What about others? From the previous period in the past, wherever it is possible to recast. Okay. Financial effect to be given in the earlier period. Okay. Okay, guys, let me clarify. You, most of the people are correct, but let me clarify. Right? Let's say this is 31st March 2021. This is 31st March 2020, and this is 1st April 2019. Correct? Now let's say this is for A Limited. A Limited is in existence since 1st April 2010. Correct? A Limited came into an existence from 1st April 2010. Right? Now A Limited is adopting Ind AS starting from this period. Why this period? Because the net worth on this date has reached to, let's say, 260 crores. And what is the guiding principle? If any company having a net worth as on the last day of the financial year, audited financial year, as per the standalone financial statement, having a net worth of 250 crores or more, Ind AS is going to be applicable in the next year. Right? So Ind AS is going to be applicable in this particular period. So that means I need to prepare Ind AS balance sheet for this year. I need to recast Ind AS balance sheet for this year as well. And I need to prepare opening balance sheet for 1st April 2019 as well. So that I can prepare this balance sheet and so that I can prepare this balance sheet. So virtually I am applying all Ind AS accounting standard on this date, 1st April 2019. I'm going to apply all 39 accounting standard, whatever standard is applicable to that company. For example, agriculture may not applicable, hyperinflationary may not applicable, power sector may not applicable, right? But whatever the standard is applicable to the company, all those standard needs to be applied from 1st April 2019, right? And all these standards are applicable retrospectively. What does it mean? Let's say there are multiple transactions. The company has come into an existence in 2010. Let's say company has given a security deposit. Let's say company has trade receivable. Let's say company has a debenture investment. And these all transactions are outstanding on this date. So what we are supposed to do, So what we are supposed to do, I am standing here. I need to go back in 2010. I need to compute the number. I need to compute the number as per Ind AS 109, as per Ind AS 32 on this date, and bring the carrying value on 1st April 2019 and record it. This is what the meaning of retrospective application. That means I need to go back in the past from the date when the transaction came into an existence, right? Provided the transaction is applicable on this balance sheet date. If let's say trade debenture, trade receivable, that has gone over on this date, but does not exist on this particular date, then there is no applicability. So what I'm saying is, if any transaction is outstanding on this date, right, and that transaction came into an existence in 2010, so I need to go back in 2010, compute the number as per Ind AS 109, and bring the carrying value on 1st April 2019 and record it in my books of accounts. This is what the meaning of retrospective application of the standard. Are we clear? Are we clear, guys? Okay. So when we are reading any standard, right? So two things, two thumb rule, I would say, remember in mind, two thumb rule. One is retrospective application, right? Bracket subject to Ind AS 101 exemption, right? Why I have written subject to Ind AS 101 exemption? Because there are certain exemption which is given under standard Ind AS 101, which you will read under this session. That this standard is saying, instead of going in the past, you have an option not to go in the past and do the fair value accounting on the transition date and move on, right? So certain exemption have been given under Ind AS 101, right? But there is no exemption in respect of financial instrument which is given under Ind AS 101. That means, my dear friend, if there is any transaction on financial instrument, that needs to be applied retrospectively, right? Second, concept of fair value. All transaction needs to be recognized at fair value. What is the meaning of this? All transaction needs to be applied retrospectively. Is that clear, guys? Is that clear? And I am hoping that you guys are preparing your coaching notes simultaneously as well. Keep interacting with me through this chat box, guys, so that I will get the motivation that you guys are actually attending the session. Okay, let me rub this. Now let's start this session, right? Let's start this standard Ind AS 109. Okay, guys, financial instrument. Rajnish is saying fair value repeats. So every transaction needs to be recognized at fair value on the transaction date, right? That is what the meaning of fair value. What is fair value? Market price, quoted price, right? You will have Ind AS 113 as well, where you will understand the different techniques of computation of fair value, right? So let's start the standard, guys. Financial instrument, right? Financial instrument. We will start from Ind AS 109 because that is the base, right? That is the base. Okay, financial instrument. Now, guys, tell me, what do you understand by financial instrument? So if any person, I give you an example, if any person says fixed assets. So whenever any person says fixed asset, something comes to our mind. What is that? It may be land, it may be building, it may be furniture, computer, fixture, car, vehicle, right? Plant and machinery. So these things comes to our mind. Now, when I say what is financial instrument, what comes to your mind? One person is saying contract. Okay. What about others? One person is saying contract. Instrument through which company raise finance. Okay. What else? Fixed value receivable, equity, debenture, contractual liability, preference shares. Very good. Very good. All these examples are absolutely correct, right? Now let's understand what is the meaning, what is the definition which is given in the standard, right? Let's try to build our own definition of this financial instrument. What the standard setter has done, standard setter has taken these two words, one is financial, second one is instrument, and he has combined these two words and prepared a 250 page document which is Ind AS 109, and similarly on same basis Ind AS 32, right? Okay, so let's break these two words. What is the meaning of financial? What is the dictionary meaning of word financial? Anyone? Involving money, financial. So dictionary meaning is denominated in monetary value. Denominated in monetary value. Money, cash, all those stuff. What is the dictionary meaning of this word instrument? What is the dictionary meaning of this word instrument? Okay, let me write. The dictionary meaning of the instrument is contract. Contract or agreement. Have we read the word contract in our past life? Have we read the word contract in our past life, guys? Most of the people are saying yes. Where we have read? Where we have read the word contract? People are saying law. We have read in law. We have read in Contract Act. What is the definition? If you can recall, what is the definition? What we have read in respect of word contract in the Indian Contract Act? What is the definition of contract, guys? If you can recall, one person is saying arrangement, anything which is binding. Mutual agreement, very good. Mutual agreement, enforceable under law. Absolutely, it can be written, it can be verbal, it can be implied, right? That is what we have read. Now tell me, can I enter a contract with myself which is legally enforceable, which is binding? No. Can you guys enter a contract with yourself which is legally binding, which is enforceable under law? No. So that means in order to enter into a contract, there must be at least two parties, right? So it is given under Indian Contract Act. It is not given under Ind AS 109. So what we have read, what we already know, what is a contract entered between two or more parties, which is legally binding, which is enforceable under law, right? So what is a contract? Two or more parties. Two or more parties. Binding agreement, enforceable under law. That is what the meaning of contract. Now, what we have said, financial meaning is denominated in a monetary value. Instrument meaning is contract. What is contract? Two or more parties, which needs to be entered either in oral, written, or implied, right? This is what we have read under Indian Contract Act, right? So standard setter has done what he has done. He has combined these two words. Let's combine the meaning of these two words. Any contract which is denominated in a monetary value is called financial instrument. Then we said any contract, the contract must have been entered between two or more parties, which is legally enforceable. Now let's extend this definition. Any contract entered between two or more parties which is denominated in a monetary value is called financial instrument, right? Let's take an example to understand this in a better scenario. Okay, let's say A Limited enter into a contract with B Limited. Hope the board, I'm again checking my voice is properly audible, board is clearly visible, no problem, no light reflection, nothing else. Okay, very good. So A Limited has entered into a contract with B Limited, right? What is the contract? A Limited is going to sell goods to B Limited. A Limited is going to sell certain goods to B Limited, and B Limited is going to pay 1 lakh rupees in consideration. A Limited sells certain goods to B, and B Limited is going to pay 1 lakh rupees in consideration. Now let's evaluate in the books of A Limited. Can I say this 1 lakh rupees which is recoverable from B is a trade receivable in the books of A Limited? Let's say this goods have already been sold and this is a trade receivable. Can I say? Absolutely, we can say this is what we have read in our basic class of 11th, right? Can I say this trade receivable is nothing but an asset for A Limited? Keep saying yes or no, right? Can I say this asset is denominated in a monetary value? Since this asset is denominated in a monetary value, can I say this asset is nothing but a financial asset for A Limited? Yes or no, guys? Trade receivable is an asset. This 1 lakh rupees is a trade receivable for A Limited. This trade receivable is an asset. And since this asset is denominated in a monetary value, which is 1 lakh rupees, can I say this asset is nothing but a financial asset for A? Yes or no? Most of the people are saying yes. Okay. Now come to B perspective in the books of B Limited. Can I say this 1 lakh rupees, this goods which B has purchased, what accounting entry B must have passed in its books of accounts? Purchase account debit to trade payable, right? So can I say this is nothing but a trade payable for B, right? And can I say this trade payable is nothing but a liability for B Limited? Correct, because we have read in class 11 trade payable is a liability. Now since this liability is again denominated in a monetary value, can I say this liability is nothing but a financial liability for B Limited? Yes or no, guys? Yes or no? Yes, people are saying yes. Okay, so from where we have started, dictionary meaning of these two words: monetary value, contract. Any contract entered between two or more parties which is denominated in a monetary value is called financial instrument. Apply this definition into this example. Sir, are there two parties involved? Yes, A Limited and B Limited. Sir, is there any contract? Yes, the contract is for sale of goods. Contract is for sale of goods. Sir, how do we apply this definition in this example? Let's see. Any contract entered between two parties, two or more parties, which give rise a financial asset of one entity and a financial liability of another entity is called financial instrument. Any contract entered between two or more parties which give rise to a financial asset of one entity and a financial liability of another entity is called a financial instrument. Right, guys? What we have done, we have started with a simple dictionary meaning and we have taken simple 11th class basic example which we also deal in day to day, and we are just trying to build the definition of financial instrument which is given in the standard Ind AS 109. One person has raised, Venkata has raised one question: is electricity deposit a financial asset? So my only question to you, as I said earlier, we need to go step by step. I have not even explained what is financial asset, and the question has start coming, sir, what is electricity? Is electricity asset a financial asset? Right? So my only urge or request, wait and have patience. We will go step by step. Everything will be clear to you. You will get the opportunity to raise your question, to ask from me, right? Don't worry. But my only urge is have patience and go step by step, please. Right, guys? So first tell me, are we clear with this example that what is the definition of financial instrument? Right? Okay. Let me take one more example. Let's focus. Let's focus. Now there is again an agreement between A Limited, between A and B Limited, right? This is a second example which I'm taking care of. Now these two parties have entered into an agreement. Now this agreement is different from the example one, right? So A Limited is going to invest in equity shares of B Limited amounting to rupees INR 1 lakh, right? Example is very simple. A Limited has invested in the equity shares of rupees 1 lakh in B Limited, right? So what the B is supposed to do? B is supposed to issue equity shares to A Limited, correct? Very plain vanilla example. Okay. Now evaluate in the books of A Limited what accounting entry A Limited should pass. A Limited should say investment account debit to bank. So in the books of A Limited, investment account will get debited. Correct? Can I say this investment is nothing but a asset for A Limited? This investment is nothing but an asset for A Limited. And since this asset is denominated in a monetary value, can I say this asset is nothing but a financial asset for A Limited? Yes or no, guys? Right? Okay, most of the people are saying yes, sir. Okay, now come to B Limited. Can I say for B Limited, it's a liability? Can I say in the books of B Limited, it's a liability? Yes or no? Yes or no, guys? Most of the people are saying yes, sir, it's liability. And couple of people are saying, no, sir, it's not a liability, it is an equity. Just try to evaluate, guys, what is the accounting entry we will pass? We simply pass bank account debit to equity share capital. Bank account debit to equity share capital of rupees 1 lakh. So that means B will not recognize in its books of account as a liability. B will recognize it as equity in its books of accounts. Correct? So in this example, we are saying for A Limited, it is a financial asset. For B Limited, it is an equity. From where we have started, monetary value and contract, two or more parties. What we said, any contract denominated in a monetary value entered between two or more parties, it is a financial instrument. Apply this definition here. Sir, are there two or more parties involved? Yes. A Limited, B Limited. Sir, is there any contract? Yes. The contract is for the investment in shares. So, sir, how do we apply this definition? Any contract entered between two or more parties which give rise to a financial asset of one entity and equity of another entity is also a financial instrument. Any contract entered between two or more parties which give rise to a financial asset of one entity and equity of another entity is also a financial instrument, guys. What we said from where we have started, any contract entered between two or more parties, right, which is denominated in a monetary value is called financial instrument, right? In the first example, what is that example? The example is the example is sale and purchase of goods, trade receivable and trade payable. For one party, it is a financial asset. For another party, it is a financial liability. What we said in that case, any contract entered between two or more parties which give rise to a financial asset of one entity and a financial liability of another entity is called financial instrument. In the second example, what is that example? Investment in shares, right? Investment in shares. In this example, we are saying any contract entered between two or more parties which give rise to a financial asset of one entity and a equity of another entity is also a financial instrument. So when we combine these two examples, guys, let's combine these two examples and let's combine the definition of these two examples. Any contract entered between two or more parties which give rise to a financial asset of one entity and either a financial liability or equity of another entity is called a financial instrument. And believe me, guys, this is the most technical definition which is given under standard Ind AS 32 as well as Ind AS 109. Now, just tell me, just by having two different examples of 11th class or the basic principles of accounting, we have derived the definition of financial instrument. What complex in this? Are you guys with me? Are you guys with me? What is the definition of financial instrument? For one party, it is a financial asset. For another party, it can be a financial liability or it can be an equity. That is a financial instrument. There must be at least two parties. There must be a contract. That is what the financial instrument is. Are we clear? Are we clear with the definition? If we are clear with the definition, guys, how can you say it's a most complicated standard? Right? Because the standards principle started from definition itself. By 11th class example, we are clear with the definition of financial instrument. Right? Should we move on? Should we move on, guys? Okay. I hope you have noted down these standards or these examples which I have plotted on the board. Can I rub this? Okay, let me rub this.
So one person has raised a hand.
Okay. Okay, guys, I am requesting if you can connect with me over the chat box itself. So Rajat is saying, sir, you are saying equity is not a financial liability, but an equity. Yes, equity is always an equity. Correct? Okay, let me move on. Financial instrument, right? So that means what we have said that for one party, okay, couple of questions have been raised. Equity is also a liability. Then why different treatment? So again, Ashish has raised this point. Ashish, my only suggestion to you, if we actually need to understand the standards, let's follow step by step. We will understand everything, right? I will discuss everything here, right? Don't jump to the last stage or don't jump to the middle stage. Okay, financial instrument. So what we said, for one party it is a financial asset, for another party it is a financial liability and or equity, right? This is a plus sign. This is for first party and this is for second party. Venkat is saying not visible. What is not visible? Guys, is this visible or not?
Yes, sir, it is visible.
Okay. So guys, just see, just by drawing this diagram, whether I have written the entire definition of financial instrument or not. It's a contract between two or more parties, which give rise to a financial asset of one entity, and either a financial liability or equity of another party is a financial instrument, right? So what is financial instrument? We said first, it's a contract, right? Second, two or more parties, and third, monetary value. Third, monetary value in terms of financial asset, financial liability, or equity. When these three terms, these three conditions get satisfied, then we will say it is a financial instrument, and then we will evaluate whether it is a financial asset, when it is a financial liability or equity, right? Okay, guys, now let's understand financial asset. Now tell me, guys, if I say cash, if I say cash, if I'm having 100 rupee note in my pocket, can I say that cash of 100 rupee is a financial instrument? Yes or no? Can I say 100 rupee note is a financial instrument? Can I say 1000 rupee note, 2000 rupee note, 500 rupee note, right? Whether these are financial instrument, yes or no? Okay, most of the people are saying no, and couple of people are saying yes, right? If you read that rupee 100 rupee note, if you read any Indian currency note, right, what is written in that? It is mentioned that I promise to pay this much amount. मैं धारक को इतने रुपए अदा करने का वचन देता हूं. I promise to pay this much amount. That means when you tender that money, you have a right to receive something in place of that 100 rupees, right? So what is that? It is a contract, because when you tender that 100 rupee note, you have a right to receive something. When you hold that 100 rupee note, that means it's a right you are having in your holding in your hand. It's a contract. Contract between whom? Contract between the RBI of this country and you guys. When you tender that 100 rupee note to a shopkeeper, it's a contract, right? That you have a right to receive something in consideration of 100 rupees. So what is a cash? Cash is a contract. Sir, are there two or more parties involved? Yes. Sir, is it a monetary value? Absolutely. Cash is monetary. So can I say cash is a financial instrument? Absolutely yes. Cash is a financial instrument. If I'm having dollar, if I'm having euro, if I'm having kroner, if I'm having Japanese yen, what is that? It's a contract. Contract between whom? Contract between the holder of that instrument, contract between the holder of that rupee note, currency or any other currency, dollar, yen, with the respective authority of that country. So what is cash? Cash is a financial instrument. Earlier we used to say it's a cash, it's a note. Now as a chartered accountant, when we deal with the public, it is supposed to say it is a financial instrument so that other person cannot understand easily, right? So what is a cash? What has changed? Nothing has changed. Cash is cash. But now as an accountant, as a chartered accountant, we should say it's a financial instrument, right guys? So cash is a financial instrument, and since this is an asset for me, which is denominated in a monetary value, is a financial asset. Are you guys clear? Are you guys clear with me how to evaluate a particular transaction? See, what I'm doing right now. I'm teaching you and providing guidance how to evaluate a transaction. First, I need to evaluate a financial instrument, whether it is financial instrument or not. If it is yes, then I need to move forward. Okay. Second example, investments. Investment in shares, right? What kind of shares? equity shares, preference shares. If I've invested in the equity shares of Reliance, if I've invested in the equity shares of Bharti Airtel, if I've invested in the equity shares of any listed or unlisted company, is that a contract? Yes. At the time of making an investment, I will I will enter into certain contract. I will tick off certain terms and condition if I'm purchasing through DMAT, right? So there is a contract. There are certain terms and condition which needs to be approved between both the parties at the time of investment. So investment in shares, it's a contract. Sir, are there two or more parties involved? Yes, between you are the first party, and second is the another company, maybe Reliance, maybe Airtel, maybe XYZ, right? Sir, this investment is denominated in a monetary value. Yes. This investment is denominated in a monetary value. Yes. So, sir, it becomes a financial instrument. Yes. And sir, this is an asset for the company. This is an asset for first party. Can I say this is a financial asset? Absolutely yes. Absolutely yes. Right? The second, what is investment in shares? The second example which we took. For one party, it is a financial asset. For another party, it is an equity. So what can be the example of first? What we discussed in the first example, trade receivable. Trade receivable, right? Or I should say, I should write here, trade receivable, right? Okay. If I've given a security deposit which I've paid, security deposit paid. For example, let me put the case study, guys. Let's say I have acquired some premises. I have acquired one premises from the lessor to operate my office from that premises. And let's say I've given 1 lakh rupees as a security deposit, which is to be refundable after 5 years when the lease get expired, right? So I have paid security deposit. What is the Indian GAAP accounting? Security deposit recoverable debit to bank, right? And when this amount will be refunded back to me after 5 years, I will say bank account debit to security deposits. Now, under Ind AS, I need to evaluate whether the security deposit paid is a financial instrument or not. Sir, is it a contract? Yes. Sir, are there two or more parties involved? Yes. You and the lessor. Lessor and the lessee are two parties, right? Sir, it is a monetary value. Yes, it is denominated in a monetary value. So it is a financial instrument. And since this is an asset for the company, this becomes a financial asset, right? Let's say I have invested in the debenture. I have invested in debentures on bonds. Is this is a financial instrument, guys? Yes or no? Is the investment in debenture or bond is a financial instrument? Yes or no? Two or more parties contract, two or more parties, monetary value, financial instrument. This is an asset for the company. It becomes financial asset. Are we clear, guys? What can be the example of financial instrument? What can be the example of financial assets? Now, can you guys give me some example of financial asset more, which you guys have seen in the different balance sheets of the companies? I have captured only 5 items. Can you guys give me more example of the financial instrument, financial asset? Okay, loan notes, loan given, which is to be refundable, right? Just remember that we are only talking about in those scenario where the amount is refundable in cash or bank, where the amount is refundable in cash or bank. Okay, guys, just tell me, if I have deposit in a bank account, if I have deposit in a bank account, the bank balance is a financial asset for me or not? Bank balance, fixed deposits. Are these a financial asset for me or not? Yes, these are the financial asset for me. So can I provide some sort of nomenclature to this? If I have a right, contractual right to receive cash, it is a financial asset. Contractual right to receive cash or bank, it's a financial asset. So one is cash, second one is investment in shares, and third is contractual right to receive cash or bank. Then I will say, if I have a right to receive cash, if I have a right to receive bank, then I will say it is a financial asset. Otherwise, I will not say it's a financial asset. Right, guys? Now give me more example. More example of financial assets, which you have seen. Gold bond is also financial assets, but gold is not a financial asset, right? Okay, now also talk about which is not a financial asset. Right, which is not a financial asset. Okay, first is PPE. PPE is not a financial asset. Why? Sir, is there any contract? If the company is having 1000 crores PPE, which is sitting as on 31st March 2021, is there any contract? Are there two or more parties involved? No. So when there is no contract, no two or more parties involved, it is not a financial instrument itself, right? What can be more example? Intangibles. Intangibles. What can be the more example? Inventory. PPE including CWIP, right? Under development. Right? Some people have talked about advance. If I've given an advance to whom? To vendor. If I've given an advance to vendor, is that advance recoverable? No. Why I have given an advance? I have given an advance to receive services. I have given an advance to receive goods, right? That is the objective. Why I have given an advance? To receive goods, to receive services, right? I'm not going to receive cash. Hence, it is not a financial asset. But if tomorrow something happened due to which I've canceled the contract and that advance is refundable now, right? Then I will apply the principle of financial instrument again on that new transaction or the modification of the transaction. Then I will say the amount recoverable in cash is a contractual right to receive cash. Hence, it is a financial asset for me, right? Therefore, advance to vendor is not a financial asset. Prepaid expense. What is prepaid expense? Prepaid expense is, for example, prepaid rent. Prepaid expense, for example, prepaid insurance. Why I have given a prepaid insurance? To claim or to get to get the insurance services. That means my objective is to get insurance services. My objective is not to get the refund, right? Hence, it is not a financial asset. But let's say if you have canceled the contract with the insurance companies and the balance amount is refundable back to you, then I will say it is a contractual right to receive cash and hence it will be a financial assets, right? What else? What else? Right of use assets. You guys have gone through Ind AS 116. Right of use assets. This is a financial asset? No, right of use assets is a notional accounting entry which I'm passing in my books, which is nothing but a present value of future liability, right? I'm not going to receive cash on account of right of use. Correct? So right of use is not a financial asset. Okay, guys. Another example. What about deferred tax? Deferred tax asset. Most of the companies recognize deferred tax. Is deferred tax asset a financial asset? Yes or no? No, deferred tax asset is not a financial asset, right? Why? What is deferred tax? If you look at what is deferred tax is nothing but a reconciling entry. It's a notional accounting entry to reconcile my statutory books with the tax books, right? It's a notional accounting entry. I'm not supposed to pay any cash. I'm not supposed to receive any cash. It's a notional entry, hence not a financial asset. Okay. Taxes. People are talking about advanced tax, provision for tax. What is tax, right? Is tax a financial asset? Yes or no, guys? If I have a refund from income tax authority, if I have a advanced tax for which the assessment has not been done, is that advanced tax, TDS, refundable tax, is that a financial asset? Yes or no? Most of the people are saying no, right? But there are couple of people who are saying yes. So for the people who are saying yes, my simple question to you, is there any contract between you guys and a government? Why you are paying tax? Is this because of the contract? No, you are paying tax because it is the law of land. It is the Indian law. It is the statutory obligation. It is a legal obligation for the companies to pay taxes. There are two things. One is legal obligation. Second one is contractual obligation, right? There is no contract in this environment. There is no contract between government and you guys. It's a legal obligation due to which you are paying taxes, right? Due to which you are creating a provision for tax in your books of accounts. Hence, it is entire taxes, not only advanced tax, not only income tax, not only GST, any other taxes, refundable or payable. It's not a financial instrument. When we will come to financial liability, people will start asking, sir, provision for tax, whether it's a financial liability or not. It's very simple answer: advance tax, income tax, TDS, GST, tax, duty, cess, fee, all are excluded from financial instruments. All are excluded from financial instrument. One person is saying implied contract, right? It's not an implied contract. The definition of implied contract is given under Ind AS 115, right? Which is a customary business practice. That means there is a customer, there's an entity, and the business practice you guys are following, that is what the implied customary business practice. Is government your customer? No. It's a legal obligation. What is written in the statute? That's a statutory obligation. What is written in the law? It's a legal obligation, right? So standard Ind AS 109 has excluded all types of taxes. I am repeating again, all types of taxes have been excluded. Whether it's GST, whether it's service tax, whether it's value added tax, whether it's income tax, whether any taxes, cess, duty, fee, excluded, right? So it's a blanket statement, all taxes excluded, right guys? All taxes excluded. Correct? Any item which I have not captured here, which you have seen in any financial statement, which we have not captured here? Happy to answer that. Question for you guys. Any query? One person is saying investment property. Apply the principle of PP, apply the principle of intangible, apply the principle of inventory. Investment property. Investment property which is held for capital appreciation. So there are a couple of more things which have been excluded from financial instrument standard. For example, gratuity which is payable. For example, leave encashment which is payable. For example, any item which has been covered in the other standard, right? Because if everything gets summarized under this financial instrument, what's the use of having different standards, right? So if you look at the scope paragraph financial instrument, certain items have been excluded, right? For example, Ind AS 16 have been excluded. For example, provision, if there is any provision which covers under Ind AS 37, hence excluded from financial instrument, right? Gratuity payable, leave encashment payable, covered under employee benefits, excluded from here. Deferred tax asset, although it's not a financial asset, right? Covered under Ind AS 12, excluded from here. One person is saying investment in shares in subsidiary. Just see here, investment in shares, whether it's a subsidiary, whether it's not a subsidiary, whether it's an associate, whether it's a JV, whether it's not a JV and associates. Deferred revenue. Deferred revenue. One person is saying deferred revenue. Are you going to receive cash? My simple question to you, are you going to receive cash in respect of deferred revenue? One person, that person is saying yes, no, in respect of deferred revenue, you are not going to receive cash, right? You are not going to receive cash. If it is actually you are going to receive cash, I just need to understand what is the transaction. Can you clarify what is the transaction in which you have deferred the revenue and you are going to receive cash? What is actually a deferred revenue, right? Deferred revenue means that you have received cash in advance, right? That means what is the accounting entry? Bank debit, let's say 100 rupees, to revenue, let's say 80 rupees, and 20 rupees is a deferred revenue, right? So you are talking about this 20. This 20 rupees will be recognized as revenue over the next couple of years, right? This is what the deferred revenue is. Okay. Now people are asking unbilled revenue. Unbilled revenue. So again, very simple answer. The guidance of unbilled revenue is given under Ind AS 115, which is a revenue standard. Unbilled revenue is of two types. I hope you guys are clear. What are the two types of unbilled revenue? Yes or no? First, we need to understand a transaction. Then we will need to reach or evaluate financial instrument. Are you guys clear with the unbilled revenue two types? Yes or no? At least say yes or no. So people are saying no. Very good. Unbilled revenue. What is unbilled revenue? Let's say first type and this is second type. First type means performance obligation is over. Only invoicing needs to be done. Invoicing to be done, right? And second is performance obligation is not yet over. These are the two types of unbilled revenue which is given under Ind AS 115. What is the meaning of performance obligation is over? Let's say you guys are providing service to your customer on a monthly basis and you are raising an invoice on 5th of next month. So that means 1st March till 31st March you have rendered your service, but the invoice is to be raised on 5th of April. That means it is a case where the performance obligation is over, but invoicing needs to be done. In that case, 115 is saying it needs to be clubbed. Unbilled revenue needs to be clubbed as a part of trade receivable. Unbilled revenue needs to be clubbed as a part of trade receivable. And what is trade receivable? We have already evaluated what is trade receivable. It is a financial asset, right? What is the second type? Second type is where the performance obligation is not over. What does it mean? That means you are providing your service from 15th February to 15th March. From 15th March to 15th April. That means as of 31st March cutoff date, your performance obligation has not been over. But you are supposed to recognize the revenue of 15 days because you are providing a services, right? That is the case where the performance obligation has not been over. In that case, Ind AS 115 is saying it will be recognized as a part of contract asset or a contract asset in the financial statement, and this is not a financial asset. right? There is a right to receive my cash, only the invoicing is pending. It is a case of financial asset. But this, my performance obligation has not been over. It is not a financial asset. It will be recognized as a contract asset in the heading other current asset or in the other non-current asset, but it is not a financial asset, guys. Are we clear, guys? Yes or no? The concept of unbilled revenue. Are we clear with the financial asset, guys? Are we clear with the financial asset? Any confusion? Any question? Should we move on then? Should we move on? Okay. Okay, guys. Okay, one person is saying share application money pending allotment, right? Share application money pending allotment. That means what is the accounting entry you have passed? Bank account debit to share application money, right? Bank account debit to share application money. First of all, we are talking about financial asset, right? We are talking about financial asset. This is in the case of financial liability, right? But let me clarify. Share application money needs to be recognized separately as a part of the statement of changes in equity. If you look at the structure or the template which is given by the Ministry of Corporate Affairs, they have said share application money needs to be presented separately, right? So within the SOCI, within the equity, this is a part of equity, right? This is a part of equity and this needs to be presented separately. But this is a case where share application money pending allotment. There can be a share application money which is to be refunded. Share application money to be refunded, right? So this is a case of liability because this I need to refund back, right? So share application money is of two types, where the allotment is pending, and second case is where the amount is to be refunded. Okay, hope this is clear. Okay, guys, now come back. What we were discussing, we were discussing financial instrument, we were discussing financial asset, and we were discussing this financial liability. So we have discussed financial assets. Let's come to this. Okay, so what is the guidance? Contractual obligation to pay cash or bank, right? For example, in the first example we took sale and purchase. For one party it is a trade receivable, for another party it is a trade payable, right? Let's say I have taken a loan from bank, loan from bank. Let's say I've taken a loan from my friend, that means other borrowings, right? Okay, guys. So if there is a contractual obligation to pay cash or bank, then it is a case of financial liability, right? What we have read in case of asset, we said, what is asset? We said one, cash, second, investment in shares, and third we said contractual right to receive cash or bank, right? So contractual right to receive cash or bank. In case of financial liability, contractual obligation to pay cash or bank. Here we are talking about right. Here we are talking about obligation, right? What can be the example? Trade payable, loan from banks, other borrowing. Can you give me more example? What can be the financial liability? What can be the financial liability? Can you give me an example? Lease liability. Okay, guys, let's devote 1 minute on lease liability. When we have talked about financial asset, we said ROU, right? What is the accounting entry we are going to recognize under Ind AS 116? ROU as a debit to lease liability. When we were discussing ROU, we said it is not a financial asset, right? So when we are discussing financial liability, now the question is, it is a financial liability or not? Is it a financial liability or not? Yes, it is a financial liability. Why? Why? I said I gave you a statement. If any transaction is get covered under other standard, then it gets excluded from financial instrument standard, right? But financial liability, it is covered under Ind AS 116, and under Ind AS 116 it is written that this lease liability is to be accounted for as per Ind AS 109. That's why when 116 has came up in 2019, no consequential amendment has been made under Ind AS 109, right? Because the guidance has been given under Ind AS 116 itself that this lease liability is to be accounted for as per 109. So this lease liability is nothing but a contractual obligation to pay cash to the lessor. Hence, it is a financial liability. Other example could be security deposit which I have received. Security deposit received. It is also a financial liability. Guys, give me more example of financial liability. If any transaction which you have seen, one person is saying derivative contract. So we will talk about derivative contract separately, right? Slightly complex derivative we will discuss. We have just started. We will discuss derivative contract separately. Any other item? Any other item? Bond, debenture. Very good. Bonds, debenture, right? So these are the financial liability. Application money which is to be refunded, it's a financial liability. Okay. Now tell me what is not a financial liability? Not a financial liability. First, all taxes. All taxes payable, right? Second, deferred tax liability is not a financial liability, right? What else? Gratuity payable. Gratuity payable is not a financial liability because it is covered under Ind AS 19. Leave encashment, not a financial liability. What else? Provision. Provision is not a financial liability because it is covered under Ind AS 37. This is covered under Ind AS 19. Minority interest is to be disclosed separately, right? It's not a financial liability. It is to be disclosed on the face of the balance sheet. separately. If I have given any advance to the vendor, right? So here we should say advance received from customer. Right? So these are some of the examples, guys, where we say these are the financial liabilities and these are not a financial liabilities. Right? One person is saying share application allotment, share application money pending allotment, not pending allotment, share application money which is to be refunded. Share application money to be refunded. Deferred revenue, it's not a financial liability. I'm not going to refund my cash. It's a liability, but not a financial liability. Okay, guys, let me take one example. And I'm hoping you are preparing your coaching notes simultaneously, guys. Let's say A Limited, and this is another party, B Limited. They've entered into a contract. A Limited is the issuer and B Limited is the holder. Holder means investor, right? So B Limited has invested in the preference shares of A Limited, and A Limited has issued mandatory redeemable preference shares of rupees 1 lakh. Right? So A Limited has issued mandatory redeemable preference shares of rupees 1 lakh to B Limited. My question to you, what is the accounting entry in the books of A Limited under Indian GAAP? Accounting entry in the books of A Limited under Indian GAAP. Anyone, guys? So people are saying, sir, we will pass bank account debit to preference share capital, or I would say this is 1 lakh rupees, right? This preference share capital will form a part of shareholders fund. And can I say this shareholder fund is nothing but a equity of company? Correct? Bank account debit to preference share capital. This preference share capital will form a part of shareholder funds, and this shareholder funds will form a part of equity. Correct? Now come to Ind AS. I hope you have noted down this thing. Okay. Okay, come to Ind AS. Right? So we are evaluating in the books of A Limited only, right? What is the definition of financial liability? We have said, we have said the contractual obligation to pay cash is a financial liability, right? Just see, is there any contractual obligation on A to repay this 1 lakh rupees back to B? Let's say this is for the period of 10 years. Just evaluate in this example, is there any contractual obligation on A to pay 1 lakh rupees to B? Yes or no? So in this example, what we need to evaluate, what are the terms of this preference shares. It is mentioned in this example that this is mandatory redeemable. That means A is supposed to pay 1 lakh rupees after the expiry of 10 years of this 1 lakh rupees back to B Limited. Right? A has an obligation to pay 1 lakh rupees after the expiry of 10 years to B Limited. So that means there is a contractual obligation on A to pay 1 lakh rupees after the expiry of 10 years. So that means under Ind AS, under IFRS, under US GAAP, We say if there is a contractual obligation on the company to pay cash, it is a case of financial liability. So what we should say in this case, we should say, what we should say, we should simply say that I have received bank account, bank debit 1 lakh rupees to preference share capital or preference share, not capital, preference share liability. And this liability is to be classified as financial liability in the books of B, in the books of A Limited. So guys, this is a classic case that where an item which has been classified under Indian GAAP as a capital, as an equity capital, that has taken a color of liability under Ind AS because of this definition, contractual obligation to pay cash, right? This is called substance over form. You must have read multiple times these words, substance over form. What is the form? Form is the legal contract which the guys have entered into, right? Form is the contract which these guys have entered into. That is a legal form. The moment the moment A Limited has seen that it's a contract, preference share, they have passed this accounting entry, bank account debit to preference share capital under Indian GAAP. But since this is in the nature of liability, because A Limited has to refunded this money in the back to the holder, this will be classified as financial liability. This is actually in substance, this is actually a form. That's why we say under Ind AS, substance over form. Are we clear with the basic example of financial liability and financial asset? Yes or no, guys? Yes or no? Any doubt, any confusion? Should we move on? So as of now, what we have done, we are only reading for last 1.5 hours. What is the definition? We have read the definition of financial instrument. We have read the definition of financial asset. We have read the definition of financial liability, and we are going to read the definition of equity. Are we clear with financial asset and financial liability and financial instrument as well? Yes or no, guys? Okay, let's move on then. Let me rub this. Okay, one person has raised a question. Sir, what is the classification of optionally convertible redeemable preference shares? Right, my question to you again, we have not even talked about classification. We are just reading the definition. If you have any doubt in the definition, please raise. Right, if there is any doubt in respect of other concept which we have not discussed, please be patient and have your question in writing somewhere. Raise your question when we will discuss those points. Right, this is for first party, this is for second party. This is the base. This diagram is the base for the entire standard, guys. Every time when we will be talking about financial instrument, we will be starting from this diagram itself, right? This is the base. Okay, this is for second party. So we have discussed financial asset, we have discussed financial liability. Now we are going to discuss what is equity. Can you guys give me a definition of equity? Can you guys give me a definition of equity? One person has raised a question, loan to be converted into equity. I'm not sure what's the question is this. Okay, guys, tell me what is equity. Have we read the definition of equity? Shareholders fund, right? Okay. Shareholders fund, very good. Not a financial asset, not a financial liability. Okay, that's okay. Anything else? What we have read in class 11? Very good. One person has said residual interest in the net asset is an equity. He has said residual interest in net asset is equity, right? What is the meaning of this? Let's go back to class 11th, right? We used to have T-shaped balance sheet. Let's say this is fixed assets, 1 lakh. Let's say this is current assets, 2 lakh rupees, right? This is 3 lakh. Total always matches. Let's say this is liability. Let's say 1,70,000, right? And this is 1,30,000, which is equity, right? That means share capital plus reserve and surplus. Correct? Very simple balance sheet, right? Now my only question is how I have arrived at 1,30,000 rupees. What I've done, the total of asset side minus my liability is my equity, right? That means what I've done, let's put this into equation. Total assets minus liability is equal to my equity. That means total asset is 3 lakh rupees. What is my liability? 1,70,000. So what is the balance? 1,30,000, and this number I have applied here. So if I need to convert this mathematical equation, if I need to convert this mathematical equation into English, what should I say? Residual portion in the total asset excluding liability is my equity. Residual portion, try to understand, try to correlate with me. Residual portion in the total asset excluding liability is my equity. And believe me guys, this is the actual definition which is given in the 11th class commerce books, accountancy books, and this is the same definition which is given under Ind AS 109, right? Asset, we know financial asset, cash, investment, contractual right. Financial liability, contractual obligation. Equity, same 11th class definition. Financial instrument, contract, monetary value. Contract we already know. That means everything we have already read in our past. Everything we have read in our past, just the only point is we have never thought from that aspect. What the standard setter has done, standard setter has taken these two words and prepare a detailed standard on financial instrument. We have read asset, we have just added the word financial into that. We have read liability, we have just added a word financial into that, right? We have read it the equity, nothing has been added in the definition of equity, right? So this is the first definition of equity. What else? What else? Second is, which is no contractual obligation to pay cash or bank, right? That means which is not a financial liability. That means which is not a financial liability, right? Third, settlement through own equity shares. For example, convertible debenture or bonds. convertible preference shares, right? So this must be clear to you. Residual interest in the net asset is equity, no contractual obligation to pay cash. And this is a third item, settlement through own equity instrument. This we will read under Ind AS 32, right? Entire chapter is dependent upon what is equity and what is liability. We will discuss in detail under Ind AS 32. Right, so one person is asking, sir, the equity is ultimately shareholder funds. That's it. Absolutely correct. Anshu is saying, sir, on the basis, second point, all taxes are a part of equity. Wrong. We are saying which is not a financial liability, right? Taxes, taxes will get covered in the standard. It's a liability, but it's not a financial liability, right? Don't mix up with equity with a liability, right? We are very clear. We have read in class 11th what is equity, what is liability. We are moving ahead from that. Don't mix up other liability with equity. That's sir, if it is not a financial liability, it becomes equity. It's not the case, guys. Don't challenge the basic concept yourself. Okay, so we have understood what is a financial asset. We have understood what is a financial liability. We have understood what is equity. Correct, guys? Any doubt on this? After this, we can move ahead. This is the basic principle, guys. Financial asset, financial liability, financial instrument, equity. If any doubt in this, I'm happy to answer that. Right? People are raising certain questions. Sir, convertible debenture, convertible preference share, optionally convertible. I have written convertible debenture. What is optionally? The word optionally, we need to understand when we will understand different concepts of Ind AS 32, different concepts of Ind AS 109. Then we will reach to that stage to evaluate the optionally convertible redeemable debenture. There can be redeemable debenture, which we have discussed, redeemable preference shares, right? There can be redeemable bonds, debenture, preference share, which we have discussed. There can be convertible debenture, we have mentioned here, which we will read under Ind AS 32, right? There can be optionally convertible instrument. We will read when we will talk about convertible debenture, right? Redeemable, optionally convertible plus redeemable debenture. We will read when we will talk about Ind AS 32, right? So for every word has a different meaning here, guys. Only suggestion, only request, go step by step. Now the question is, are we clear with the basic concept of the definitions, asset, liability, equity? Yes or no? Okay, now people are saying, sir, can we have a short break? Okay, guys, so I think we should take a break of 15 minutes, right? Then we should start with the classification of financial instrument, right? I hope you guys are enjoying today's session, and I believe today's session does not seems to be very complex, right? I will try to make it very conceptual and logical, right? Okay, let's take a break for 15 minutes. Let's come back after 15 minutes. Okay. Okay, guys, should we restart? Suraj is saying very old method. Old method of what? Okay, guys, should we restart? Okay. Next topic is, guys, classification. Classification of financial instrument, right? This is the very most important topic of the financial instrument, right? I hope this is visible to you. This is the most important topic of the financial instrument. If you have understood this topic, right, I would say 60 to 70% of the standard is in the grip. But if you have lost this topic, then entire financial instrument has gone, right? So let's focus on this topic. This is the key, or this is the strength of financial instrument, I would say, right? So let's focus here. So first of all, what is the classification? Classification means what? This is nothing different. We have already read this word classification. For example, under Indian GAAP, we used to classify investment as a short-term investment or a long-term investment. We used to classify trade receivable as a short-term trade receivable, long-term trade receivable. We used to classify provision of gratuity as a long-term and short-term. So what is this? This is a classification, right? Same basis, we have a classification of financial asset. So one person is saying, hi sir, I'm unable to view the video. Guys, are you facing the same challenge? Video, audio clear or no? Okay, most of the people are not facing any challenge. So I'm requesting you, if there may be a network problem from your side. Okay. So similarly, the way we are classifying any item as an asset or liability into a current, non-current. Similarly, we are classifying financial instrument, we are classifying financial asset, we are classifying financial liability into some classification, right? So what we are going to discuss, we are going to discuss the classification of financial asset first, right? Classification of financial liability, then we will talk about the classification of equity. Correct, guys? So let's start with classification of financial asset. Correct? Okay. What actually I am preparing here is my starting points remains the same: financial instrument, financial asset, financial liability, and equity. Within the financial asset, I'm going to prepare another chart, right? Similarly, under financial liability, I'm going to prepare another chart. Similarly, under equity, I will prepare one more chart, right? But my starting diagram or the flow chart remains the same. Okay, the classification of financial asset is amortized cost. This is one. This is second, fair value through OCI, and third, fair value through P&L. Correct? This is AC. This is FVT OCI. This is FVTPL. Okay. This is OR. This is OR. That means, guys, what I've written here. Let's say, give me an example of financial asset. For example, trade receivable. For example, security deposit receipt. For example, cash. For example, bank. For example, investment in shares. Right. So when I am having any of these transaction, right, which is a financial asset, I need to evaluate whether that cash needs to be classified at amortized cost, whether that trade receivable needs to be classified at amortized cost, whether that investment in shares, whether that investment in debenture needs to be classified at amortized cost, or whether that assets needs to be classified at FVTOCI, or whether that asset needs to be classified at FVTPL. right? So these are the three categories, these are the three classification of the financial asset. Very, very important. If you download any annual report, any financial statement of any listed company and read the accounting policy of financial assets, read the accounting policy of financial instrument, you will get everything what we are going to read today, right? Tomorrow session, we will take up one annual report of any company, maybe Infosys, maybe Bharti Airtel, right? And we will go through the accounting policy that what we will read today, what we will read tomorrow, we will corroborate whether that is there in the annual report of any listed company or not, right? Very important again. So one is amortized cost, FVTOCI, and believe me guys, I am keep on repeating multiple times, right? Similarly, in the case of definition, I have repeated definition at least 4 or 5 times. Similarly, we keep on repeating this 4 or 5 times, right? If you are not clear on any particular aspect, you will see that I will keep on repeating the things, you will get to know automatically. Okay, now amortized cost. First question arises, what is amortized cost? Can anyone tell me what is amortized cost? Can anyone tell me what is amortized cost? Okay. Let me know, guys, if I need to compute the closing balance of a debtor. If I need to compute the closing balance of a debtor under Indian GAAP, closing balance of debtor under Indian GAAP, right? What should I do? If I need to compute the closing balance of debtor as of 31st March 2021, right? What should I do? How can I compute the closing balance of a debtor? Can anyone tell me closing balance of debtor? 11th class question. Okay, very good. Ruchir has raised the answer, has given me the answer. Opening balance, sales and receipt. Absolutely. So what should I write? Opening balance. Opening balance plus transaction during the year minus any collection plus any interest. If I'm charging any interest from the debtor, should I add it or not add it? I will add minus any bad debt, and then I will reach to the closing balance of debtor. Right? This is how we follow. Opening balance, transaction during the year, collection plus any interest minus any bad debt. Correct, guys? This is how we compute the closing balance of debtor. And believe me, guys, this closing balance of debtor is called amortized cost under IFRS or under Ind AS. This closing balance, the way we are computing the closing balance of debtor since class 11, since day-to-day normal life, this closing balance, instead of saying this, it is a closing balance, it is called amortized cost under Ind AS, under IFRS. So what has changed? Nothing has changed. Earlier we used to say amortized cost. Sorry, earlier we used to say closing balance. Now we will say amortized cost. Earlier we used to say it's a contract. Now we will say it's a financial instrument. Earlier we used to say it's a note. Now we will say that 100 rupee note has taken a color of financial instrument. What has changed? Nothing has changed. This closing balance of debtor is called amortized cost. So what is the definition of amortized cost? Transaction, opening transaction plus transaction during the year minus any bad debt plus any interest minus any collection is nothing but a amortized cost. While comparing from Indian GAAP to Ind AS, only one change has come up. What is that change? Only one change has come up. That change is on the basis of interest. Under Indian GAAP, I used to compute this interest on the basis of simple interest method. What is simple interest method? Amount multiply by amount multiply by interest rate multiply by time, right? This is simple interest method. But under Ind AS, what should I do? I will compute this interest on the basis of effective interest rate. How to compute effective interest rate? We will take one example. I will explain you how to be computed, right? So someone, guys, if someone asks you what is amortized cost, very clear answer. The Indian gap closing balance of the debtor, Indian gap closing balance of an asset is equal to the amortized cost except interest, where the interest is to be computed on effective interest rate methodology. Right? What is amortized cost? It is nothing but a closing balance of a debtor, closing balance of the security deposit, closing balance of the cash. The closing balance of Indian GAAP will become the amortized cost, except one difference, that where the interest is there and interest needs to be computed on effective interest rate methodology. Right? Under Indian GAAP, we follow simple interest rate method. What is simple interest rate? Principal amount outstanding multiply 10%, multiply any interest rate which I'm charging from the debtor on the delayed payment, multiply by the time period is equal to my simple interest. This is also called time proportion method, right? But under Ind AS, I follow effective interest rate methodology, right? So this is what amortized cost is. So, sir, if this amortized cost is always applicable in case of debtor, what about others? What about others? For example, what can be the example? Security deposit which I paid. If I paid security deposit, right? So what is the answer in that case? How to compute amortized cost in case of security deposit? Let's see. Now we are talking about not in respect of Indian GAAP, we are talking about in respect of Ind AS. So security deposit which I paid, opening balance, right? Transaction during the year, further security deposit paid, minus I have collected my security deposit, plus if I'm charging any security deposit interest, minus any bad debt on the security deposit is equal to my amortized cost. Correct? Sir, how do you compute the amortized cost in case of cash? Very simple. Opening balance of cash plus I have collected more cash during the year minus any cash paid during the year. There is no interest in case of cash, minus any cash which has got bad. Sir, is there a scenario where the cash has become bad? Guys, 10 years ago or before 5 years ago, I used to think cash cannot be bad, right? But after demonetization, it is possible. Cash needs to be written off. It is possible, right? So this is the way we compute the closing balance of the cash. And sir, this closing balance of cash becomes the amortized cost. Yes or no? Absolutely yes. So sir, what is changing from Indian GAAP to Ind AS? My dear friend, that is what I'm saying. Nothing is changing. That is what I'm saying since morning. Nothing has changed. Earlier we used to say asset. Now we have added one more word, financial asset. Now we have created a differential difference between what is asset, what is financial asset, right? Earlier we used to say contract. Now we are saying contract. Now we are saying financial instrument, right? Earlier we used to say these are the different assets. These are itself an asset, but now we have added a one more word, financial asset. Earlier we used to say, sir, this have been recognized at cost. Now we are saying this will be recognized at amortized cost, right? So these words have been added. These new words have been added in the Ind AS 109, right, guys? Right? So what is amortized cost? This is what the amortized cost is. What can be the examples of amortized cost? Second point, examples. Examples of amortized cost. What can be the example? Trade receivable, trade receivable, B, cash, bank, security deposit paid, D, investment in debenture, bonds, right? Very important. Investment in shares can never be classified at amortized cost. What can be the examples of amortized cost? These are the examples of amortized cost. Trade receivable, cash, bank, security deposit paid, investment in debentures, other payables. I can write other payable, other receivable, sorry. Other receivable, right? But investment in shares cannot be classified at amortized cost, right? Why? Because we need to discuss a couple of more concepts here, right? Can I rub this, guys? Have you guys noted down what is amortized cost? Okay. Okay, guys. Now we are going to discuss what are the different conditions which are attached to amortized cost. First condition, business model test to collect contractual cash flow. This is the first condition. Second condition is solely for payment of principal and interest. This is also called SPPI test. First is business model test to collect contractual cash flow. Second is SPPI, which stands for solely for the payment of principal and interest. Right? There are further conditions. Principal and interest must exist. Interest can be fixed or floating. For example, LIBOR plus 0.5%, interest can be any percentage. For example, 10%, 0%, right? Fourth point, principal and interest shall not be linked with equity price or any other index. Any other index except inflation index. Let me know, guys, once you are done, once you have noted down all these points, so that I will start explaining these points. Let me know if you are facing any challenge in reading anything here. Let me know once you are done, guys. Okay, everyone has done. Noted. Okay, right. I'm just repeating again if anyone has left. Business model test to collect contractual cash flow, right? This is the first condition. And plus sign means and, right? Solely for the payment of principal and interest, SPPI test. Principal and interest must exist. Interest can be fixed or floating. Interest can be any percentage, for example, 10%, 0%, right? Principal and interest shall not be linked with any equity price or any other index except inflation index. So that means if the principal interest is linked to the inflation, then this condition will get satisfied, right? Now let me take a couple of examples to explain. Right, in order to classify any asset at amortized cost, both these condition needs to be satisfied, right? Okay, I hope the board is clearly visible to you. Okay, now let's say A Limited has entered into a contract with B Limited. What is the contract? Sale of goods of rupees 1 lakh. B Limited is supposed to pay 1 lakh rupees to A Limited, right? Now come in the books of A Limited, right? Now we are going to repeat everything what we have read since morning. First, financial instrument. Is this is a financial instrument for A? What is financial instrument? Any contract entered between two or more parties which give rise to a financial asset of one entity and either a financial liability or equity of another entity is called financial instrument. So for this example for A Limited, we say it is a financial instrument because there is a contract, two or more parties involved, monetary value. Correct. Now, is it a financial asset? We need to evaluate. Is it a cash? No. Is it an investment in shares? No. Is it a contractual right to receive cash? Yes. So it becomes a financial asset for A Limited, right? Then what we need to evaluate? We need to evaluate classification. How many classification are there? Sir, there are three classification. What are those? Amortized cost, fair value through OCI, FVTPL. But sir, we have read only one. So guys, we are only talking about the amortized cost. Okay, for amortized cost, what is the first condition? Business model test to collect. What is the first condition? Business model test to collect, right? So here we are what saying, we just need to understand the business model. So there can be three business model of any company, right? Business model, what is the approach of the company? What is the intention of the company? What is the model of the company? Right? One model is, for example, company has invested into the debenture of any company. Let's say I have invested, A Limited has invested into the debenture of Bharti Airtel, right? For the period of 10 years. So if my intention is, hear me out very clearly, guys. If my intention is, or if my business model is that I will hold the investment of debenture till the end of the 10-year, that means I will hold the investment till the end of the maturity period, right? My business model test to collect will get satisfied. what is the meaning of business model test to collect? What is the meaning of this? Now in this transaction, what is the intention of A? What is the intention of A? What is the business model of A? Business model of A is to sell goods and collect my money, right? Business model of A is to sell goods and collect my money. If the intention or the business model of A is to collect money in this example, then business model test to collect the contractual cash flow will get satisfied, right? What is contractual cash flow? Very complex word seems to be, right? If I say A Limited has a business model to sell and collect his money, right? Now I'm changing this English language. The objective of A or the business model of A is to sell goods and collect contractual cash flow, right? What is contractual cash flow? Nothing but money. What is contractual cash flow? Cash flow is 1 lakh rupees. This is arising because of the contract in nature. So what is the objective of A? What is the business model of A? To collect contractual cash flow. If that is the objective of A, first condition of business model test to collect will get satisfied, right? Business model test to collect will get satisfied. That means this condition is will get satisfied when there is an objective, when there is a business model to collect my contractual cash flow by retaining the asset till the end of the maturity period. That means if it is for the period of 3 months, let's say this is a period of 3 months, A is retaining the asset till the end of 3 months, then this condition will get satisfied. I give you another example. I have invested in the bonds or debentures of Bharti Airtel, right, for the period of 10 years, 10% rate of interest. If my intention, if my business model to keep that investment till the end of 10 year, my business model test to collect contractual cash flow will get satisfied. Sir, but if I have an intention to sell those, or business model is that I will sell before 10 years, that means I will sell after 8 years. So guys, if the business model is to not hold till the end of maturity period, and the business model is in such a nature that I will sell that investment before the maturity period, so I will talk about that kind of business model when I will talk about fair value through OCI, right? Sir, that if one more business model can be there where the company is selling and purchasing the shares of the company. The company is acquiring shares today, company is selling shares today, tomorrow. Sir, in that case, what should be the business model? In that case, I will talk about that business model when we will talk about fair value through P&L. So there can be only three types of business model. Either I am retaining the asset till the end of maturity period, that will be a case of amortized cost. Second business model, that means I'm not retaining the asset till the end of maturity period, I am selling prior to that. That will be a case of fair value through OCI. And sir, I am doing a trading on a daily basis, on a weekly basis, on a monthly basis. That will be a case of fair value through P&L, right? So here, business model test to collect the contractual cash flow. That means a business model is to retain the asset, to retain the asset or to retain the financial asset till the end of maturity period. Now guys, just tell me, is first condition of business model test to collect the contractual cash flow, which is nothing but a money, is this clear to you or not? बहुत सिंपल शब्दों में ऑब्जेक्टिव क्या है? To collect my money by holding the asset till the end of the maturity period. This condition will get satisfied, right? This needs to be the business model of the company, right? It should not be the case I'm changing my business model on day-to-day basis. Company should retain the policy of it. If you look at the financial statement of any company, they have to disclose that what is the business model of the company, right? Because on that basis, my financial asset is to be divided into these category and hence to be accounted for accordingly, right? So this needs to be disclosed in the financial statement. Any doubt, guys? in business model test to collect the contractual cash flow? Yes or no? Guys, at least say yes or no. Okay. So first condition is okay. Now come to the second condition. Now guys, tell me, A has to collect 1 lakh rupees in this example. A has to collect 1 lakh rupees in this example. Is principal exists in this transaction? Just evaluate. Just see on the board and see whether principal exists in this transaction, yes or no. Now, second question, whether interest exists in this transaction, yes or no. Principal exists. What about interest? Interest exists or no? No. Now read the third condition. Interest can be any percentage. It can be 0, it can be 2%, it can be 3%, can be 10%. Right? So interest exists in this transaction, but the rate of interest is 0%. Right? Rate of interest is 0%. That means principal exists, yes. Interest exists, yes, but the rate of interest is 0%. Sir, interest can be fixed or floating, yes. Sir, we understand what is fixed rate of interest, but what do you mean by the floating rate of interest? LIBOR plus 0.5%, right? MIBOR plus 0.5%, LIBOR plus 0.2%. That is floating rate of interest, right? So sir, we understand principal, we understand interest. Sir, we understand fixed or floating. Now we understand the rate of percentage can be any percentage. What is the meaning of last one, where the principal and interest shall not be linked with the equity price? Now tell me guys, is this principal of 1 lakh rupees and 0% rate of interest, is this linked to the Bharti Airtel equity share price? No. Is this linked with the Reliance equity share price? No. Is this linked with the any other listed company's share price? No. Is this linked with the any other unlisted company share price? No. Now tell me, is this linked with any index? For example, consumer price index. Is this principal and interest linked with the consumer price index? No. Sir, is this in principal and interest linked with the oil price index? No. Sir, is this principal and interest linked with any other index of the global except inflation? No. So when this is not linked with any index, when this is not linked with the equity price of any company, I will say fourth condition will get satisfied, and I would say all these conditions will get satisfied. Then I will say SPPI will get met. And once condition number 1 and condition number 2 will get satisfied, then I will say this trade receivable needs to be recognized at amortized cost, right? Then I will say this trade receivable needs to be recognized at amortized cost. How to compute amortized cost? I have already told you how to compute. Opening balance, transaction during the year, minus collection, plus any interest, minus any bad debt, which is nothing but a closing balance of Indian GAAP. Except one change. What is that one change? Effective interest rate of interest to be considered instead of simple interest rate. Sir, this is what we were doing under Indian GAAP. These conditions were not there under Indian GAAP. Even then we were doing same. After reading so much of complex condition, we are doing the same which we were doing under Indian GAAP. So what's the use of that? Nothing. That is what I am saying since morning. First read Indian GAAP accounting, then come to Ind AS. Right? What the standard setter has done? Standard setter has provided lots of condition, lots of complex guidance, and prepared a 250-page document which seems to be very complex. But what is the crux? Ultimately, we are doing the same accounting of trade receivable which we were doing under Indian GAAP, except the change of method of interest. Apart from that, everything remains the same. Indian GAAP does not provide any guidance. What are the different conditions to recognize trade receivable at the cost value or the closing value? Indian GAAP does not provide any guidance how to compute the closing balance of a trade receivable. Still, we are using those concepts, basic principle of accounting, and we are computing the closing balance. And here, after reading so much of the complex guidance, we are reaching to the same conclusion. This is what Ind AS 109 is. Are you guys with me? Are you guys with me? Yes or no? Right. So I hope guys now business model test and SPPI test must be clear to you. Let me take one more example. After that, it should be clear to you. Okay. So one person is asking, sir, what will be the case when the interest does not exist? The same example we quoted, right? There is no interest, but we are saying the rate of interest is zero actually in that case. Okay. A Limited has entered into a contract with B Limited. What is the contract? A Limited has paid security deposit of rupees 1 lakh for 5 years, right? Which is to be refundable back to A Limited after the expiry of 5 years. Correct, guys? Now we are evaluating in the books of A Limited. Correct? Why every time A Limited? Because we are reading asset, right? For A Limited, it is an asset. That's why we are evaluating in the books of A Limited. Correct? Is it a financial instrument? Quickly, yes or no? Is it a financial instrument in the books of A Limited? Yes. Contractual right to a contract entered between two or more parties which give rise to a financial asset of one entity and a financial liability of another entity is a financial instrument. Is it a financial asset? Sir, we need to evaluate. Is it a cash? No. Is it an investment shares? No. Is it a contractual right to receive cash? Yes. Sir, then we need to evaluate the classification amortized cost. First condition, business model test to collect. What is the objective of A? Whether to collect at the end of 5 years? Yes. Or whether to collect before the 5 years? No. Right? The objective of A is that utilize the premises for the period of 5 years, then surrender the premises, get his money back and move on. So the objective of A is to collect my money, to collect the objective of business objective or the business model is to collect my money, to collect the contractual cash flow after the expiry of 5 years. So first condition, business model test to collect will get satisfied. Second condition, SPPI. SPPI. Principal exists? Yes. Interest exists? Yes, but the rate of interest 0%. Sir, interest can be fixed or floating. Doesn't matter in this case because rate of interest is 0%. Fourth condition, very important. Sir, is this principal interest linked to the equity share price of Reliance? No. Linked to the equity share price of Bharti Airtel? No. Linked to the equity share price of any listed or unlisted company? No. Sir, is this principal interest linked to the consumer price index? No. Sir, is this linked to the share price index? No. Sir, is this linked to the oil price index? No. Right? If it is no, SPPI will get satisfied. I will classify my security deposit at amortized cost. Sir, then what will happen? How to compute amortized cost? Opening balance of security deposit plus additional security deposit paid minus amount collected plus any interest if there is any minus any bad debt of security deposit is equal to the closing balance of security deposit of Indian GAAP. That will be called as amortized cost under Ind AS, except one change, that interest is to be computed based on effective interest rate methodology. Sir, again, the same conclusion which we have reached, which was there under Indian GAAP. Absolutely, guys. That is what I'm saying since morning. Financial instrument is not a complex thing. The only thing we need to understand the basic principle and what has changed and why that has changed. Are you guys with me? The entire concept of amortized cost, yes or no? Yes or no? Sir, can you give us a couple of more examples? Definitely yes. Let me rub this. So we have taken two examples of security deposit and trade receivable. Okay, let's take two more example on amortized cost, then we will move on to FVTOCI. Right, so we have taken two example, trade receivable, security deposit. Financial instrument, we said yes. Financial asset, we said yes. Amortized cost, we said for business model test to collect, we said yes. And SPPI, we said yes. Correct. Now let's take one more example. Let's say cash. Sir, is cash a financial instrument? Yes. Sir, is cash a financial asset? Yes. Sir, we need to evaluate business model test to collect. What is the objective? We are having 100 rupee note, right? If I tender that 100 rupee note, I will get something in place, right? So business model test will get satisfied in that case. Sir, principal and interest. Principal there, yes. Interest there, yes, 0%. Sir, is that 100 rupee note linked to the equity share price of any company? No. Index? No. Sir, this condition will get satisfied. That means cash will be classified at amortized cost. Sir, how to compute the closing balance of amortized cost? Opening balance plus cash received minus cash paid plus any interest which is zero, and finally if there is any bad debt on cash, right? Bad debt can also happen if the note get tiered or demonetization kind of thing. You will impair those cash, right? So that is how the cash will be computed. Sir, this is the same principle where we compute the closing balance of cash under Indian GAAP? Absolutely yes. Sir, what happen if I have given a loan to someone which is to be refundable? Let's see, A Limited has given a loan to B of rupees 1 lakh, which is to be refundable from A perspective. Sir, is it a financial instrument? Yes. Sir, is it a financial asset? Yes. Sir, I need to evaluate amortized cost. Absolutely. Business model test to collect after 5 years. This condition will get satisfied. Right? SPPI principal exists? Yes. Interest exists? Yes. The rate of interest is 0%. Fixed or floating doesn't matter. Sir, is this linked with the equity share price of any listed company? No. Any unlisted company? No. Sir, any index? No. Sir, that means SPPI will get satisfied. Sir, what is the answer? Answer is amortized cost. Sir, how do we compute the amortized cost? Opening balance of the loan given plus further loan given minus any collection plus any interest minus any bad debt. Closing balance where the interest is to be computed on effective interest rate methodology. This is what the concept of amortized cost, guys. I hope the entire concepts of amortized cost must be clear to you guys. One person has raised a question, foreign currency also remain the same? Absolutely. What is foreign currency? First of all, question is incomplete. Let me complete that question. Question is, let's say if I am having a foreign currency debtor, whether the treatment of Indian GAAP gets changed? No. The only thing is at the end of year, I will convert that debtor into INR, and the change in the fair value and the change in the foreign currency will be charged to PNL. That will remain the same, but accounting, nothing will get changed. Evaluation, nothing will get changed. Are we clear, guys? Should we move on? Yes or no? Can I rub this? Okay, perfect. Okay, so what we have concluded here is this is amortized cost first. This is or this fair value through OCI, right? FVT, OCI, and FVTPL. Correct. So what we have concluded for amortized cost, video got stuck somewhere. Hmm. Okay, amortized cost, we have said two things. I'm writing in short, business model test to collect contractual cash flow plus SPPI. I hope this should be clearly visible to you, right? Now, let's move on. Fair value through OCI, right? Fair value through OCI? First of all, it is written in the heading fair value, right? So that means if I am classifying my asset at this fair value through OCI, that means every time I need to recognize that fair value itself, as the head, as the name of the category suggests, right? Second point, we are talking about OCI. Can you guys tell me what is OCI? Can any one of you tell me what is OCI? Because you guys have read OCI concepts in session 1. Okay, people are saying, sir, its full form is other comprehensive income. Okay, full form is other comprehensive income. But there are certain items which doesn't get recognized in P&L. Those items will get recognized in OCI, right? There are around 12, 13 items which get recognized in OCI, right? Which is notional in nature, which is likely a change in the fair valuation kind of thing. For example, what are the items which gets recognized in OCI? Can you guys tell me what are the items which get recognized in OCI? Okay, for 5 minutes, let's talk about OCI. OCI items not to be reclassified to P&L, right? And these are the items to be reclassified to P&L, correct? What are the items which needs to be recognized? First, actuarial gain and loss on what? On defined benefit obligation like gratuity, right? Second, revaluation gain and loss on PPE, fair valuation of equity instrument. Fourth, capital reserve in case of business combination, right? Share of profits and loss in associates, JV, right? Here, net investment hedge, cash flow hedge, fair valuation of debt securities, foreign currency translation reserve, right? What else? Share of profit and loss in case of associates or JV. These are the items which get recognized in OCI, guys, right? If I talk about actuarial gain and loss, this is coming from Ind AS 19, right? Revaluation gain, this is coming from Ind AS 16. Fair valuation of equity instrument, this is coming from Ind AS 109. Capital reserve, this is coming from Ind AS 103. Share of profits and loss in associates and JV, this is coming from Ind AS 28. right? Net investment hedge and cash flow, Ind AS 109. Fair valuation of debt securities, this is again coming from Ind AS 109. This is coming from Ind AS 21, and this is coming again from Ind AS 28, right? So these are the items which gets recognized in OCI, right, guys? So here this is about Ind AS 1, which I mentioned here, right? So Ind AS 109, we are going to talk about only these two items when we are talking about fair value through OCI. Because is saying, sir, screen is not clear, screen is blur. Every person is facing the same challenge. Okay, let me check. Now tell me, guys, is it clear or not? Not yet. Nothing has changed, guys, from my side. Okay. Now tell me, guys, any improvement? Okay, that's good. So guys, these are the 10 items which I mentioned here, and under Ind AS 109, we will be talking about these two items: fair valuation of debt securities and fair valuation of equity instruments, right? Now we have mentioned fair value through OCI. So we have discussed what is fair value. That means on each reporting date, I will recognize that transaction. I will recognize that that financial asset at fair value every time, and change in the fair valuation will be routed through OCI, right? And this is what the OCI is it is. So one person is saying, Tiwari sir, is still not clear. Voice breaking. Again is getting blurred. Actually, guys, nothing is changing from my side. Should I continue? Okay. So requesting you guys, if you can note down all these items so that I can move ahead. Okay, one person is saying, sir, this profit and loss in associates and JV coming in both sides. Absolutely, yes, this is coming in both sides. Right, one person is saying, sir, what is written in the first item? Net investment hedge. Net investment hedge. Net investment hedge. Right. Okay, so people are saying, sir, this item is coming twice here as well as here. Why it is so? So where we need to recognize, you need to recognize on both the side. Just think, if I am preparing my financial statement, my associates and JV also preparing its own financial statement, correct? जो मेरी एसोसिएट है और जो मेरी जेवी है, they are also preparing its own financial statement. That means they are also preparing its OCI. That means they are also preparing its OCI. तो उनकी भी तो लेफ्ट साइड और राइट साइड आइटम होगी. So for example, if I'm holding 20% in associate, 20% of the left side item will go left side, 20% of the right side item will go on right side. Is that logic clear? Is that logic clear, guys? So people are again asking, sir, is this the exhaustive item? Largely, this is the exhaustive item. There are more 2 or 3 items, right, which is generally not used in the practical scenario, right? So there is no need for discussion to have a discussion on those items. These are the items which we generally use in a day-to-day life and which we have seen in the financial statement of the companies, right? If you look at Ind AS 1, there are a couple of more items which is written, right, guys? Okay, let me move on, right? We need to discuss a lot. Okay, let me rub this. Okay, people are still not clear why it is coming. So, okay, let's say H Limited is holding 20% in associate, correct? So associate OCI, right? Revaluation 1 lakh rupees, actuarial 2 lakh rupees, right? And here FCTR of rupees 1 lakh, right? So when holding company will prepare its OCI, so holding company is supposed to take the equity pickup of this 1 lakh rupees, equity pickup of these 3 lakh rupees. So what should holding company will do? Share of profits of associate 20% of 1 lakh rupees, which is 20,000. Share of profits 3 lakh 20%, 60,000. This is what I'm trying to say. Left side item का 20%, right side item का 20%. Up now, I think it should be clear to you guys. This is basic fundamental, guys. I'm not sure why you are struggling in basics, how to prepare OCI. Okay, let me move on. So when we are talking about a fair value through OCI, we will talk about 2 things. Investment in debt instruments, or I would say, let's talk about conditions first. Right? What is the condition? Condition number 1, condition number 2. Business model test to collect and sell plus SPPI, right? Plus SPPI. Objective is not to hold the asset till the end of maturity period, right? For example, investment in debentures, bonds, right? SPPI same as that of amortized cost. Right here we are saying, guys, it's a business model test to collect and sell. That means the word and sell has been inserted here. That means first business model test, we have talked about amortized cost. What is the business model? Business model is to collect the contractual cash flow by holding the asset till the end of maturity period. But here my objective is to collect the contractual cash flow. But when I will sell that asset before the maturity period, right? So what is the distinction between this business model test and this business model test? Here the objective is to collect till the end of the maturity period, till the end of maturity period, to collect on maturity. But here the business model is not to collect on maturity, but prior to that maturity. If that is the objective, then I will classify my investment at fair value through OCI. What can be the example? If let's say I've invested in the debenture and bond of Bharti Airtel for 10 years, right? My intention in day one that I will sell after 6 years. Then it will fail business model test to collect contractual cash flow. I will classify as business model test to collect and sell. What is SPPI? It's same. All the four conditions of SPPI of amortized cost will remain the same as it is in case of FVTOCI. Now tell me, guys, is this concept business model test to collect and sell clear? SPPI is common, right? SPPI is common. So that means if SPPI is common, SPPI is here, SPPI is here as well. If SPPI gets fail, let's say if SPPI gets fail, that means I cannot classify my trade receivable or any financial asset at amortized cost. I cannot classify my financial asset at FVTOCI. My last resort is fair value through P&L. That is why it is called a residual category. That is why it is called a residual category, right? Second, we have talked about two types of business model. What is the business model? To collect the contractual cash flow at end by holding the asset till maturity. Second business model, to collect but before holding the asset before the maturity. And the objective of business model is what? Business model is trading. Business model is trading. That means asset or financial asset is held for trading, right? Held for trading. What can be the example? Derivatives is an example of this as well, right? Investment in shares is an example where it is held for trading. Right, guys? I hope this must be clear to you. SPPI is common and fair value through P&L is nothing, but it is fair value. Every time you will do fair valuation, but change in the fair valuation will be routed through P&L. Let me write this. Financial asset to be recognized at fair value. Changes in fair value to be recognized in P&L. Financial asset to be recognized at fair value, and second is changes in fair value to be recognized in P&L. Similarly, let me write here financial asset at fair value through OCI shall be recognized at fair value on each reporting date. Second, change in fair valuation to be recognized in OCI. Right, guys? Any doubt till now? Any doubt till now? Have you noted down? So one person is asking, sir, what about the residual category? Residual category means there is no condition attached to fair value through P&L, right? If asset is not classified at amortized cost, if it is not FVTOCI, this is the last result, which is a last category, which is a residual category, right? Because there is no condition attached to it. Guys, first let me know if this is clear or not, because there is one more concept which is left in respect of FVTOCI. Have you noted down everything? Done, guys? Yes or no? Okay. Okay, guys. Fair value through OCI, right? I'm getting into a detail of fair value through OCI, right? What type of instruments to be included here? One is investment in debt instruments, right? If you remember in OCI, when we prepared OCI, we have talked about two things: investment in debenture, investment in debt instrument, and investment in equity instrument, right? This is what we have discussed, right? Here, what could be the example? The example could be investment in debenture, bonds, correct? An example here would be investment in shares. Okay. Investment in debt instrument to be recognized at fair value, right? Second, change in fair valuation to be recognized in OCI. Third, if on this, if there is any interest, if there is any interest income on such financial asset shall be recognized in P&L, right? That will not go in OCI. That will be recognized in P&L, right? If I come to here, investment in equity, investment in equity shares will fail SPPI test, right? One person is also asking, sir, when will be the scenario when the SPPI test will get failed? Any of you guys have not raised one question, sir. Investment in shares, right? Investment in shares, let's have invested in the shares of Bharti Airtel of rupees 1 lakh, right? Principal is there, interest is there 0%, interest can be fixed or floating, interest can be any percentage. But fourth condition in that is principal and interest shall not be linked to the share price. But if I made an investment in the Bharti Airtel, my investment is linked to the share price, right? In that case, SPPI will get fail. So if the SPPI get fail, I cannot classify that amortized cost, correct? I cannot classify that amortized cost because SPPI is a condition of amortized cost. If SPPI gets failed, I cannot classify my investment at FVT OCI, correct? Now let's read point number B, irrevocable exemption. Investment in shares not held for trading can be recognized at FVT OCI, right? Can be recognized in FVT OCI or FVTPL. Choice of classification of FVT OCI or FVTPL is given to management. This irrevocable exemption not held for trading, right? Choice is given to the management. Third point, such exemption is available on investment by investment basis. Correct. And the C point is dividend income to be recognized in P&L. Right, guys, let me explain what are these terms. Investment in debt instrument, for example, debenture, for example, bond. If it is held for the purpose of sale before maturity, then I will classify it as FVTOCI. And what will be the accounting? Investment in debenture to be recognized at fair value every time. And the change in the fair valuation will be recognized in OCI. But on this debenture, if there is a 10% debenture of rupees 1 lakh, I will get interest income. That interest income will be recognized in P&L. Why P&L? Because it is an actual income. It is not an notional income. That's why it will be recognized in P&L. Now, guys, tell me, first of all, the counting of investment in debt instrument is clear or not? Then I will move forward and discuss accounting in equity instrument. Yes or no, guys? Quickly, out of 150 people, only 7 people have answered me. Okay, now come to equity instrument. First of all, the fourth condition of SPPI will get fail because my principal amount is linked to the equity price, right? So, sir, if it get fail, that means I cannot classify that amortized cost. Absolutely. Investment in shares, if you see your notes, I have put into the blocks that the investment in shares can never be classified at amortized cost. Why? This is the reason, because investment in shares will fail SPPI test. Correct. Now let's understand, if it cannot be classified at amortized cost, then what is the accounting guidance? Accounting guidance is investment in equity shares will fail SPPI test. That is first point. Then there is an irrevocable exemption which is only available in case of investment in shares. What is irrevocable? That means once the option has been taken, once the exemption has been taken, you can't go back, right? What does it mean, right? I have mentioned it is not held for trading. That means investment in shares is not held for trading. If it is held for trading, then go to FVTPL, right? If you look at your coaching notes, in the FVTPL category, we have mentioned residual category. It is to be taken where the investment is held for trading, right? So here we are only talking about those scenarios where the investment is not held for trading. I can write investment as well. Investment not held for trading, correct? So what is the irrevocable exemption? First is investment in share which is not held for trading can be recognized either at FVTOCI category or FVTPL. That means अगर investment held for trading नहीं है, so it's a choice given to the management कि जो उसकी classification है वो FVTPL भी ले सकते हैं और FVTOCI भी ले सकते हैं. It is a choice which is given to the management, right? And once the choice has been taken by the management, let's say management ने choose कर लिया FVTOCI, then management cannot irrevocable exemption. This is an irrevocable option. That means management cannot change in the future. अगर FVTOCI ले लिया तो फ्यूचर में FVTPL नहीं ले सकते. अगर FVTPL ले लिया आज तो फ्यूचर में FVTOCI नहीं ले सकते. That is what the meaning of irrevocable exemption. And that option is given investment by investment. What is the meaning of investment by investment? Investment in subsidiary 1, FVTOCI ले लिया. Investment in subsidiary 2, FVTPL ले लिया. Investment in subsidiary 3, FVTOCI ले लिया. Investment in subsidiary 4, FVTPL ले लिया. That is what the meaning of investment by investment. That means the choice is given to the management either to take FVTOCI route, FVTPL route, only if it is not held for trading, right? And the choice is on investment by investment basis. But on this investment, If I will get any dividend income, so should I also take to the P&L or should I also take it to OCI? The answer is it will be taken to P&L only. Right? Now I have said, I can say that we have concluded the classification of financial assets. Let me summarize again what we have discussed. We have discussed amortized cost, right? Within the amortized cost, there are two conditions: business model test to collect and SPPI. What is business model test to collect? To collect the contractual cash flow by holding the asset till the end of maturity period. Second condition is SPPI. What is SPPI? Solely for the payment of principal and interest. What is SPPI? Principal must be there, interest must be there. Interest can be any percentage. Interest can be fixed or floating. Interest and principal shall not be linked to any equity price, shall not be linked to any index except inflationary index. What can be the example? Example, trade receivable, security deposit paid, investment in debenture. The objective is to hold the asset till the end of maturity period, right? SPPI, in amortized cost, investment in shares can never be recognized at amortized cost. Why? Because it will fail SPPI. Second is a fair value through OCI. There are two conditions: business model test to collect and sell, and second is SPPI. SPPI is common, right? Business model test to collect and sell. That means I am holding the asset before the end of maturity period. I will sell and collect. I will collect my money back, right? Why I will do so? Because I will feel, I will think that in the market there is a more lucrative, better opportunity as compared to this investment. So I will sell prior to the maturity period and invest in a third opportunity which is available in the market at that point in time. Third is FVTPL, no category. It's a residual category. If a financial asset not to be classified at amortized cost, not to be classified at FVT OCI, then it will be recognized at FVTPL. If this is also this category is also to be used when the investment share is held for trading purpose as well, right? This is the gist of entire classification of financial asset. Okay. Akhil is saying we may carry the investment subsidiary and joint venture at cost, whether it is another classification or just amortized cost. Okay. So if you are recognizing amortized cost, if you are recognizing your investment at cost, it will get excluded from the classification aspect of Ind AS 109. It will get captured under Ind AS 27. Because para 10 of Ind AS 27 says if the investment in subsidiary, associated and joint venture can be classified at cost or can be classified at fair value through or fair value as per Ind AS 109. If you have taken the route at cost as per Ind AS 27, you can classify it at cost as per Ind AS 27. But if you have taken a route of fair value as per Ind AS 109, then you have to classify at fair value either FVTPL or FVTOCI. Under Ind AS 109, there is no cost option. That cost option is given under Ind AS 27. I hope this is the answer to your question. Correct? Okay, one person is saying, sir, in case of amortized cost, where the interest income will arise, obviously in P&L, in the amortized cost, nothing is to be recognized in OCI. Amortized cost is the cost, income in the P&L to be recognized. If there is any loss, that needs to be recognized in P&L. Apurv is saying, sir, I missed the part that how the investment in shares can be recognized at FVTOCI. Investment in shares can be recognized. So this is the answer. I have written on the board. This is the answer to your question. One person is saying irrevocable exemption. So irrevocable exemption, try to understand the meaning in Hindi, right? Once the option has been taken, you can't go back and change the option, right? Try to understand the meaning of irrevocable. एक बार ऑप्शन ले लिया है तो आप चेंज नहीं कर पाओगे फ्यूचर में. अगर आज आपने FVTO से रूट ले लिया तो आप FVTPL नहीं ले पाओगे. अगर आपने आज FVTPL ले लिया तो आप फ्यूचर में FVTO से नहीं ले पाओगे. फॉर एग्जाम्पल सब्सिडरी वन, आई एम रिपीटिंग अगेन गाइस, सब्सिडरी वन इन्वेस्टमेंट है, आपने FVTO से ले लिया, यू कांट टेक FVTPL इन फ्यूचर. सब्सिडरी टू इन्वेस्टमेंट आ जाए, you have taken FVTPL route today, you can't take FVTOCI in the future. Subsidiary 3 FVTOCI ले लिया, subsidiary 4 FVTPL ले लिया, subsidiary 5 FVTOCI ले लिया, subsidiary 6 FVTPL ले लिया. That is called investment by investment option, which is available to the management of the company only in those scenario where the investment is not held for trading. Correct, guys? Now I would say irrevocable exemption, this concept FVTOCI must be clear to you. So Rajneesh is saying, sir, if the shares is held for trading, Rajneesh, 5 minutes ago I have explained and mentioned on the board. Guys, can anyone tell me to the Rajneesh what is the answer? Yes, one person has mentioned the answer FVTPL. FVTPL. I have explained in very detailed. Everything is written on the board. Any doubt, guys? One person is saying investment in shares of the unlisted company can be recognized at fair value through OCI. You need to justify these parameters which I mentioned at FVTOCI. Very simple. Who has raised this question? Ruchir. Ruchir, you need to justify those conditions. If it is held for trading, then go to FVTPL. If it is not held for trading, FVTOCI option is available. What is accounting? This is the accounting. How does it matter? It's an unlisted company or unlisted or unlisted companies. Standard is not bifurcating into the listed or unlisted. Shares mean shares, whether it's listed or unlisted. This is the answer to your question. What else? What else in financial asset? Investment in mutual fund. Absolutely. Investment in mutual fund. First of all, it's a financial asset. Absolutely. It's a financial instrument. Absolutely. It's an amortized cost. No. Why? Because it is linked. Because if we evaluate SPPI, the principal amount is linked to the equity shares of any other company. So it will fail SPPI. If it is fail SPPI, I cannot classify it amortized cost. I cannot classify that FVTOCI. Irrevocable exemption is not available to mutual fund, right? What is left? FVTPL is the answer, right? Who has raised this question? Jayashri has raised this question. Are you clear, Jayashri, on this? SPPI gets failed. SPPI is common. If SPPI gets failed, answer is no for amortized cost. Answer is no for FVTOCI. What is left? Third portion, which is FVTPL. That is why we said it is the residual category. Okay, Aman is saying, what is the basis for management to decide FVTPL and FVTOCI? Intention, business model. अगर मैनेजमेंट का बिजनेस मॉडल है मैं ट्रेड करूंगा, then it is FVTPL. If the अगर मैनेजमेंट का ऑब्जेक्टिव है not to trade but to sell prior to the maturity period, FVTOCI. Happy to have other doubts. Doubts, guys? Now I am asking for doubts. Limited doubts I have received. No other doubts. Okay. Rishikesh has raised one point, sir. For FVTOCI business model test plus SPPI test both to be satisfied. If SPPI gets failed, then how does FVTOCI applicable? Then it will not be applicable. If SPPI gets failed, amortized cost is not applicable. FVTOCI is not applicable. Only exemption is given in case of equity shares. Investment in equity shares, SPPI हमेशा fail होगा. I have mentioned here. Investment in equity share will fail SPPI. But उसके लिए एक irrevocable exemption दी हुई है. Only for equity shares, not for any other item. Right? Rishikesh, is that the answer to your question? Okay. Any other doubt? Should we move on or should we take a break for 15 minutes? Okay, guys, let's take a break for 15 minutes. Let's come back after 15 minutes. Okay? I'm hoping that you guys are enjoying today's session. And don't worry, guys, after once we come back, We will devote 10 minutes, 10 to 15 minutes on small concept. Then we will take a practical example on the board, how to write a journal entries, how to write a journal entries with numbers. And believe me, you will get much more clarity that how this needs to be accounted for. Deepak is saying, sir, please share the notes also. Deepak, first of all, I am not using any notes here, right? Everything is in front of you. And anyways, I have already shared a couple of slides with the ICI team. You can download from the respective website. Manali saying, sir, it is only for the investment shares. Yes, Manali, I have only mentioned the categories investment and equity instrument. It is not for any other thing. It is only for the investment in shares. One more doubt, Indu has raised this doubt. So if the investment share chosen to FVTOCI, then it will fall in the category of non-reclassify OCI, right? Absolutely correct. That is the objective. Why I have mentioned OCI first. It will be in that category item which is not to be reclassified in P&L. Absolutely correct. Let's take a break for 15 minutes, guys. Should we restart, guys? Classification of asset is completed, right? Financial liability classification very simple as compared to financial asset classification, very simple and very short, right? Classification of financial liability, right? Amortized cost and PL. Default category, right? This is default category. No conditions attached. Examples: trade payable, lease liability, borrowings, loan repayable, security deposit received. Right, these are the examples of amortized cost. FVTPL, example derivatives. Liability held for trading. Right, so this is what the classification of financial liability, guys. It's very small topic. One is, the first is amortized cost, second one is FVTPL. Amortized cost is default category. That means, what is the meaning of this? मतलब क्या है कि that means कोई भी liability होगी, it will be a default category for the recognition of financial liability except these items, which is a derivative, liability held for trading, held for sale, held for trading or sale, right? There is no condition attached to it. Example could be trade payable, lease liability, borrowings, loan repayable, security deposit received. This is what financial liability classification, right? Then we have equity classification, right? What is equity classification? Very simple answer. There is no classification of equity. Equity is equity. Equity is equity. Are we clear, guys? I hope you are attending the session, guys. Yes or no? Can I rub this? Okay, one person is saying liability held for trading. Let's say there is a business which the company is planning to sell, right? In that business, there are assets, there are liabilities, right? So that liability will be recognized at financial liability, which is held for trading. Then it will be a case of FVTPL. What's written after trade payable? It's a lease liability. I have mentioned lease liability, borrowings, loan repayable, security deposits. So one person is saying, sir, is there any for borrowings? Are there any condition attached? No, there is no condition attached. I mention here, no condition attached. Right, guys? So one person is saying, sir, can you explain default category, no condition attached? When I started explaining this thing, I explained this only. No condition means in the financial asset case there are multiple conditions, but in this case there is no condition, right? Default category means if there is a financial liability which is not except these one, those financial liability will be directly classified at amortized cost, right? That's why we are saying it's a default category. Okay, so by this we are done with classification, guys. So if you look at, we have done with definition, we have done with classification, right? Financial asset classification, slightly lengthy, slightly complex, but financial liability classification, very simple. Equity classification, there is no classification, right? Now, very small topic, measurement. Measurement. That means a particular item, particular financial asset, particular financial liability, at what value that needs to be measured, right? So first is initial recognition, and second is subsequent recognition, right? If let's say the asset is recognized at amortized cost, FVTOCI and FVTPL, this is my financial asset. Then we have amortized cost, then we have FVTPL, FVTPL for financial liability, right, guys? Now what we are saying here is that measurement principle, very simple. If you have understood the classification part, measurement is almost over, right? Will not take more than 2 minutes. If you are clear with the classification, measurement will not take more than 2 minutes to understand the concept. So what we are saying, if there is a investment in debenture, initial recognition, at what value should I write here? At what value should I recognize my investment in debenture? Can anyone tell me? Investment in debenture, at what value to be recognized? Yes or no? At cost of purchase. So people are saying cost. What is cost? Let's understand. If the people are saying cost, what is cost? Cost is nothing but purchase price, right? Plus directly attributable cost, right? For example, brokerage, for example, commission, and so on, right? This is what my cost is, correct? This is what my cost is, right? So this cost, if I'm dealing with a unrelated party, third party, this is actually my, this price is nothing but a transaction price, right? And this transaction price is nothing but a fair value, right? So when, if you remember, guys, in the morning when we have started with two thumb rule. That first is retrospective application and second is fair value. Every transaction needs to be recognized at fair value on the transaction date. So that means if I've invested in the debenture and I've classified at amortized cost, at what value should I recognize on the initial recognition? Fair value, right? What is the fair value? This purchase price is the fair value, correct? And if I've classified my investment debenture at FVTOCI, at what value should I recognize? At what value should I recognize? Yes or no? 1% out of 150 people, 1% said it's fair value. It's fair value. Thumb rule is fair value on the initial recognition. Right? Now, guys, tell me, if I've classified my asset at amortized cost, right? Initial recognition fair value. What about subsequent recognition? Subsequent कैसे करेंगे? Think about it. Think about it. See the name of the category. Just try to see the name of the category. One person said it will be recognized at amortized cost. Absolutely correct. What is amortized cost? How it is to be computed? Opening balance, transaction during the year, minus collection, plus any interest, and minus any bad debt. Amortized cost, right? Indian GAAP closing balance is equal to amortized cost except interest. Under Ind AS, we follow effective interest rate. In case of FVTOCI, what should be the value? Just see the classification. Fair value. What about FVTPL? Fair value. What about financial liability? Amortized cost. What about FVTPL? Fair value. Initial measurement, subsequent measurement concept is over just by having two principles: initial recognition, thumb rule, fair value, subsequent, as the name of the category suggests. Over. Any doubt on this? Any doubt on this, guys? Transaction price shall be considered as fair value in case of unrelated party, right? Okay, one person has raised a question. What about equity? It's in fair value, right? So if this question has been raised, so I would say classification is not clear to you, right? First you classify, then you come at the measurement part. This is the third topic which we are discussing, right? First evaluate what is the classification. The moment you evaluate the classification, answer is written on the board in respect of measurement, right? Okay, one more concept: transaction cost. Transaction cost, what is the transaction cost? For example, brokerage, commission, upfront fee, right? So if it is classified at amortized cost, then what is the answer? Capitalized, right? अगर इन्वेस्टमेंट शेयर 100 रुपीज का था, 20 रुपए का मैंने कमीशन पे कर दिया, so that means I have ended up paying 120 rupees. Under Indian GAAP we capitalize 120 rupees, right? Same here, capitalize in the cost of asset. If it is FVTO से capitalized, right? If it is a case of FVTPL, charge to P&L, right? Okay, in case of financial liability, let's say I've taken a loan of rupees 100. I have taken a loan of rupees 100 and I have paid upfront fee, processing fee or upfront fee. Processing fee 20 rupees, right? What is the accounting under Indian GAAP? Indian GAAP में कैसे recognize करते हैं loan? Can you tell me? What is the value of loan under Indian GAAP? Very good. One person is saying loan की value. I have taken a loan from bank. Loan from bank. I have taken a loan from bank 100 rupees and I have paid processing fee of 20 rupees. What is the value of loan? Jayashri is saying 120 rupees. Strange. 100 रुपए आए, 20 रुपए चले गए, तो 120 रुपए की लोन की वैल्यू बची. It should be 100. So if this is the balance sheet, loan is 100 rupees, and I would say prepaid asset of rupees 20. Some companies charge directly this 20 rupees to P&L. Some companies charge this 20 rupees directly to P&L. Some companies amortize it over the period of time. The guidance under Indian GAAP is not that clear, but this will be the accounting, right? Loan is 100, asset or P&L 20 rupees, correct? But under IFRS or under Ind AS, what we are saying, 100 रुपए आए, 20 रुपए चले गए, तो effectively आए कितने? Effectively आए 80 rupees. So under Ind AS we will recognize loan at the rate of 80 rupees only. So that means if there is any transaction cost under Ind AS at amortized cost reduced from the value of loan, right? This will be the accounting under Ind AS. And if it is a case of FVTPL, charge to P&L. Right, it will be reduced. 100 rupees का लोन लिया, minus 20 कर दिए, 80 आ गया. इंडियन गैप में भी तो यही किया था. इंडियन गैप में क्या किया था हमने? इंडियन गैप में, if this is the balance sheet, this is the loan 100, right? Hope this is visible, right? If I charge directly to P&L, so my reserve and surplus is negative 20, right? इंडियन गैप में भी तो 80 रुपीज आ रहे थे यहाँ पे हमने डायरेक्टली रिकॉर्ड कर दिया 80 रुपीज. डज इट मेक एनी डिफरेंस? अगर मैं वो एसेट रिकॉग्नाइज कर रहा हूँ, इट विल बी एमोर्टाइज्ड. एमोर्टाइज्ड होके कहाँ जाएगा? पीएनएल में. पीएनएल से कहाँ आएगा? रिजर्व एंड सरप्लस से. अल्टीमेटली बैक टू 80 रुपीज. डज इट मेक एनी डिफरेंस? Whatever the amount I have taken as a loan of 100 rupees, I am supposed to pay, right? I'm supposed to pay. I will explain how the interest income, how the interest expense to be recognized under Ind AS, right? We will take some practical example now, guys. Right? I hope you have noted down and this is clear to you. Now let me take couple of practical example with proper journal entries that how the accounting needs to be taken care of. Ali is saying classification wise in India, the liability value is reduced. Absolutely. This will be the, so we have talked about definition, we have talked about classification, we have talked about measurement, and we have talked about transaction cost accounting. So this is our fourth concept, right? Now let's take couple of examples, guys, to understand what we have read since morning. Are you ready, guys? Okay, guys. Let's take one example. A Limited enter into a contract with B Limited. right? Hope this is visible. A Limited has paid security deposit of rupees 1 lakh, which is to be refundable after 3 years, right? Simple example, 1 lakh rupees security deposit paid to be refundable after 3 years. Now you guys have to tell me Indian GAAP accounting. What is the first entry? Quickly, quickly, guys. I hope you are attending the session. 151 people are there. No response. One person, Praveen Kumar, is saying bank account debit to SD. I have paid 1 lakh rupees. How should I debit bank account? Right. So we are talking about in the books of A Limited. I have paid 1 lakh rupees. Right. So what is the entry? Security deposit recoverable to bank 1 lakh rupees. Right. What is the second entry after 3 years? Bank debit to security deposit recoverable of rupees 1 lakh. Right. This is what my accounting entries. Come to under Ind AS. Right. What we have read since morning, definition. Now tell me, is it a financial instrument? Yes or no? Is it a financial instrument? Yes or no? Quickly, guys, we should be very fast now. Any contract entered between two or more parties which give rise to a financial asset of one entity and a financial liability of equity or a financial liability or equity of another, it's a financial instrument. Second, is it a financial asset for A? Yes. Is it a cash? We are talking about security deposit, right? Security deposit. Is it a cash? No. Is it an investment shares? No. Is it a contractual right to receive cash? Yes. So it becomes financial asset. Then what we have read, classification. First is amortized cost. Business model test to collect. What is the objective? Whether the objective of A not to collect, whether the objective of A is to deal or trade in security deposit? No. Whether the objective of A not to held till the end of maturity period? No. What is the objective? The objective is to hold the asset till the end of the maturity period. So this will get satisfied. SPPI. SPPI. Principal exists? Yes. 1 lakh rupees. Interest exists? Yes. The rate of interest is 0%. Principal interest can be fixed or floating. Interest can be any percentage. Correct? Is this principal interest linked to the equity share price of Bharti Airtel? No. Reliance Industry? No. Any other listed company? No. Any other unlisted company? No. Is this linked to the oil price index? No. Is this linked to the consumer price index? No. Global price index? Any other index? No. So, sir, all these conditions get satisfied. So, can we say SPPI gets satisfied? So, can we say amortized cost gets satisfied? So, it will be recognized at amortized cost, right? How to compute amortized cost? Opening balance of security deposit plus any transaction for the security deposit made plus any interest minus any collection minus any bad debt. Sir, initial measurement we read, initial recognition, measurement principle. What is the measurement principle? Fair value. Subsequent recognition, amortized cost. This is what we have read since morning, right? Okay, now let's do accounting under Ind AS, right? Day one. So what will be my first accounting entry? Security deposit recoverable to बैंक. बैंक से कितना गया? 1 लाख रुपए, right? What is the value should I write here? Security deposit recoverable. It should be 1 lakh rupees or not. It should be 1 lakh rupees or not. Most of the people are saying this is 1 lakh rupees, right? Now try to evaluate this transaction, try to understand this basic transaction from my perspective. I have paid 1 lakh rupees today, right? 1 lakh rupees, right? Now I have to recover 1 lakh rupees after after 3 years down the line in this example. I have paid 1 lakh rupees. I have accounted it as 1 lakh rupees. After 3 years, I'm going to receive after 3 years 1 lakh rupees, right? And as per the principles, this will be recognized at fair value, right? So is the security deposit recoverable financial asset? Yes. Is this bank a financial asset? Yes. So has I recognized this bank at fair value? Yes, because I have paid 1 lakh rupees today. The value of 1 lakh rupees is 1 lakh rupees because I'm doing the transaction today. I'm paying today, right? So this bank initial recognition fair value, that is correct. What about security deposit recoverable? I am supposed to receive 1 lakh rupees after 3 years down the line. So whether the security deposit fair value is 1 lakh rupees in this example, yes or no? Yes or no, guys? Or should I need to compute the present value of that 1 lakh rupees, which I'm going to receive after 3 years? Right? This needs to be recognized at fair value. This needs to be recognized at fair value. But what is the value I need to compute? Can you guys compute what is the present value? What should I write here? Can you guys compute for me? Let's say the rate of interest is 10%. Let's say the discount rate is 10%, not rate of interest, discount rate. Right? I will provide some sort of insights on discount rate as well to you once we close this question. Let's say the discount rate is 10%. Now, can you compute what is the present value? Right. So people have said 75,131. 75,131, and this is 1 lakh rupees. So there is a delta of around 24,000 something, right? What is that delta? 1 lakh rupees minus 75,131, 24,869, 24,869, right? Now, guys, tell me, where should I park this 24,000 rupees? Where should I park this 24,000 rupees? This will be accounted as prepaid rent. This will be accounted as prepaid rent, and this prepaid rent will get clubbed as a part of ROU as per Ind AS 116. Right? Why prepaid rent? Why prepaid rent? Try to understand from other perspective. जिस चीज की वैल्यू आज 75,000 rupees थी, I have actually ended up paying 1 lakh rupees. Why? Why? We need to evaluate a relationship in this transaction. What is the relationship between A and B? The relationship between A and B is the lessee and lessor, right? And if we need to account for the lessee and lessor relationship, that is always a prepaid rent. That means it will be deemed as a prepaid rent. जिस चीज की वैल्यू 1 लाख थी उसको मैंने 75, जिस चीज की वैल्यू 75,000 थी उसको मैंने 1 लाख में दिया, right? That means I have paid 24,869 extra. Then it will be deemed that it is a prepaid rent because of the relationship between these two parties. वो मान लिया जाएगा ये 25,000 रुपए का जो डिफरेंस है, that is prepaid rent, right? I can also write it deemed prepaid rent, right? And this will get clubbed as a ROU asset as per Ind AS 116. इसको मान लिया जाएगा कि this difference is a prepaid rent. That means I have prepaid the rent for maybe 1 month or maybe 2 months, right? That's why we have recognized this as a prepaid rent, right? Okay. What is the second entry? What is the second entry? What should I do now? And okay, before moving further, I just need to understand how this 75,000 rupees has been computed. Can anyone tell me which method or which principles you have applied to reach at this 75,131? What formula you have applied? I need to understand that formula. Okay, one person is saying I have applied interest rate discounted effective interest rate. One person is saying present value factor. One person is saying present value, but no one is telling me what is the formula you have applied. Okay, one person has given me the answer. Sir, I have applied P1 plus rate to the power T is equal to amount, right? And this P is the principal. This amount is the amount which I will get after 3 years. So amount is 1 lakh rupees. Principal is nothing but a present value. 1 plus rate is 10% to the power 3. So my principal or the present value number comes out to be like this, right? And this P is nothing but the, if you have computed correctly, this must be coming like this, right? So guys, what I want to tell you, you already know what is this formula, but is this formula IFRS 9 is telling me this formula? Answer is no. Who is telling me this formula? This is 11th class NUT chapter, provided provided a person must have taken the mathematics in 11th, right? This is actually 11th class mathematics formula in NUT chapter. IFRS 9 is not telling me how to compute present value. Indian GAAP is not telling me how to compute present value. IFRS Ind AS are not telling me how to compute present value. Who is actually telling me? 11th class mathematics formula, basic principle, basic stuff. Try to correlate the things with your past knowledge. Right? We started the standard. We started today's session with this concept. Try to link with your past knowledge. Right? So this is not a new thing which we are going to understand. Are you guys with me? Do you agree with my statement? Yes or no? Yes or no, guys? Okay. This we already know when we have read in class 11. Okay, let's move on. What is the next entry? What is the second entry? Do I supposed to pass next entry? Okay, very interesting question one person has asked. Deepa, sir, class कब तक finish हो जाएगी आज? Very good question. So Deepa, we will try to close by 2:30. Don't worry, right? The important part is we need to understand these new concepts. That is more important, right? What is the next entry, guys? Next entry is prepaid rent. Let's close this prepaid rent. So what should I do? I will charge to P&L in the form of rent to prepaid rent, right? Is there any entry on day one? जिस दिन मैंने transaction करी उस दिन entry डालूंगा, or it will be passed at the end of first year. At the end of first year, let's say year end, right? This is first year end, this is second year end, and this is third year end. Hope the board is clearly visible to you guys. Right. What should be the amount, guys? Now tell me what should be the amount. What should be the amount? 7513, 24,869 divided by 3. I'm not sure how you guys have computed 7513. It's coming to 24,869 divided by 3. 8290. I'm getting 8290. I'm not sure how you have computed 7513. So here I am not recognizing interest income. I am recognizing the prepaid rent amortization in the P&L. Amortization of prepaid rent. Which method? Straight line method. Right? How I have computed 20, 24,869 divided by 3 is equal to 8290. Right? Obviously, this will be on proportionate basis, right? If this transaction is for the part of the year, right? So you will compute the proportionate basis. Let me write this. Proportionate basis, right? Straight line method over the period, right? In this example, let's assume I have entered into a transaction on 1st April. Okay, one person as expected, one person has raised a question, Rishikesh, sir, why it is on straight line method basis? It should be 7513 for the first year. Rishikesh, can you explain why it is 7513 for the first year? What is the logic behind this? First, give your perspective, then I will give my perspective. What is the logic behind this? Why it should be 751 year? 10% on security deposit. Okay. Now I will give my perspective. Prepaid insurance, you have paid 1 lakh rupees for 5 years. Now tell me, year end, first year end, what should be the P&L impact? Rishikesh, question for you. Prepaid insurance 1 lakh rupees for 5 years, right? And at the end of year one, what should be my P&L expense? 20,000 rupees. So one person has already answered to Rishikesh, right? So Rishikesh, I think Sumit has answered to you, to your query. So this is the how to account for the prepaid insurance. Which method you have applied, Rishikesh, in this case? Which method you have applied? SLM method, correct? This is what the principle you know. This is what the principle which Indian GAAP says. Now just evaluate this accounting entry, whether I have carry forward the Indian GAAP principle here or not, or whether I'm changing anything different or telling you anything different which is not there under Indian GAAP. Just evaluate. This is a prepaid rent. This is a prepaid insurance. Both are prepaid expenses. Just evaluate whether I'm following the Indian GAAP accounting by passing this accounting entry or not. Why you're saying me that it should be straight line method basis? Why you are not saying me I will go for the security deposit amount which is lying in bank, I will go for the bank 10% or blah blah blah, right? Simple basic example of Indian GAAP, I have carry forward in the form of rent, nothing else. Is that clear to you? Okay. Okay. Now let's move forward. Now I have dealt with prepaid rent. Now I need to deal with security deposit recoverable. 1 लाख की सिक्योरिटी डिपॉजिट थी, उसको डिस्काउंट कर दिया 75,000 रुपीज का. डू आई नीड टू ऐड इंटरेस्ट? डू आई नीड टू ऐड इंटरेस्ट इनकम ऑन दिस एसेट? यस और नो? what should be the entry? Security deposit recoverable, security deposit recoverable to P&L interest income, correct? Now can you guys tell me what is the amount for at the end of year 1? What is the amount at the end of year 1? Simple 10% rate of interest, 7513, right? Can you guys tell me the interest for next year? Can you guys tell me the interest for the next year? People are saying 8264. Anyone has any doubt why the next year number is coming to 8264? What is the number for the next year? 9091. People are saying 9091. Just check whether the total of these all these three numbers are coming to 24,869. They should be 2, rounding off, right? I hope why it is changing, why it is changing, this must be clear to you, right? But let me clarify again. It may possible that some people have a doubt. Very simple concept. Let's say you deposit in a bank. Let's say you deposit 1 lakh rupees in a bank for 3 years in FD at 10%, right? एक साल के बाद कितना पैसा बैंक से मांगोगे? सर मैंने तो 1 लाख जमा कराया था प्लस 10% के हिसाब से आई विल आस्क 1,10,000 रुपए, राइट? सेकेंड ईयर में कितना मांगोगे? 10,000 मांगोगे या उसको 11,000 कर दोगे? सर वो तो मैं 11,000 ही लूंगा। तो जब वहां 11,000 लोगे, दैट मींस द अमाउंट ऑफ इंटरेस्ट इज चेंजिंग इन द नेक्स्ट ईयर। व्हाई? बिकॉज मैं इंटरेस्ट के ऊपर इंटरेस्ट लूंगा। आई विल टेक इंटरेस्ट ऑन द प्रिंसिपल प्लस इंटरेस्ट, right? Similarly, my rate of my amount of interest is changing. It is changing in this example as well, right? So how 8264 is computed? Opening number 7513, 75131 plus 7513 multiplied by 10%. Simple. This is called compounding interest, right? Same logic of 11th class I have applied in the third entry. I hope the third entry must be clear to you. There is no rocket science in the third entry. There is no rocket science in the third entry, guys. And what is the fourth entry? I will get my money back in which year? In the year third. पैसे कितने मिलने हैं? पैसे तो 1 लाख रुपए ही मिलने हैं, right? पैसे तो मेरे को 1 लाख रुपए ही मिलने हैं। Now evaluate, guys. This is what the accounting entries which we are supposed to pass under Ind AS, right? Under Ind AS, right? Let's evaluate what we have done. Indian GAAP basic accounting, security deposit debit to bank. Now we are passing so much of complex accounting entry, but is it complex? What I've done, first accounting entry में तो change किया, right? We have said it is a prepaid rent and it is arising because of the fair valuation impact, right? Prepaid rent को क्या किया? We have amortized it on a straight line method basis, and then we have charged interest. This interest, the method of charging this interest, on which principles we are charging? Amount is equal to principal plus rate to the power t. 11th class mathematics formula of charging interest is nothing but effective interest rate method. So is IFRS 9 telling us something new? No. some jazzy words has come up. ये तो पहले ही पढ़ चुके हैं हम 10 साल पहले in 11th class, that what is the accounting principle of recording interest, right? So this is the accounting entry of amortization in the P&L on straight line method basis, which we already know. Rishikesh has raised his doubt. Now he himself is clear, right? Indian gap में ऐसे करते थे. Indian gap में ये accounting होती नहीं थी, but we have read this concept, right? So मैं क्या कर रहा हूँ, 1 लाख को डिस्काउंट करके 75,000 ले आया, 75,000 पे हर साल थोड़ा थोड़ा इंटरेस्ट बुक कर रहा हूँ. Which method? Effective interest rate method, which is given under Ind AS 109. Sir, this is the same method which we have read in Ind AS in 11th class mathematics. If you compute 8264 by this method, how do you compute? Let's see. How do you compute? Amount principal is कितना है? 75131 multiply by 1 plus rate 10% to the power 2. You will get 75131 plus 824. Right? So this amount, if you look at, this principal is on straight line method basis, this principal is on effective interest rate method basis. In the P&L, what is happening? There is a notional expense of 8290, there is a notional income of 7531, there is a notional expense of 8290, there is a notional income of 82464, there is a notional income in the P&L, notional expense in the P&L, notional income in the P&L. But if you do the summation, it should be coming out to be 24869. If you do the summation of this, 82,24869, the same number. That means over the period, my P&L remains the neutral, but on year by year basis, there is a delta in the P&L. Right? 8290, 71513. There is an extra expense in the P&L. In the second year, there is a slightly low amount, 36 rupees or 26 rupees extra impact in P&L. But in the fourth year, there is an extra income in the P&L. But on year by year basis, there is a difference. But on totality basis, it will be neutral. Now the question arises. Sir, if there is an extra expense in 2 years, if there is an extra income in third year, do I supposed to make the payment additional tax to the government on these expense? अगर expense में deduction मिल जाएगी और income में क्या I am supposed to pay taxes? Answer is no. Right? Taxes is supposed to be paid on Income Tax Act 1961 plus ICDS. And guys, if you look at ICDS, as of now, only 10 ICDS have been issued, and there is no ICDS on financial instrument. A couple of years back in 2017 or 18, ICE has issued a guidance note how to account for the notional item which is arising because of the ICDS. Right? And they have said all the notional items are not allowed to be deducted, are not allowed as a deduction, and any notional income is not allowed to be taxed. These are all notional income. But sir, if the company is into the MAT 115 JB, if the company is into the MAT, what should I do? My starting point is the PBT. So my dear friend, there is no consequential impact has been inserted in Ind AS 115 JB, and therefore if the company falls into the MAT, starting point remains the PBT. These items will get taxed. These items will get taxed. I hope the concept of entire this thing must be clear to you. One person is saying, sir, can you please repeat the taxation part? Very simple. Income Tax Act, जो extra expense है, it's not allowed to be deducted. जो extra income है, that is not subject to tax. Very clear. But if the company falls in the MAT, my starting points remain the PBT. तो वो जो expense है और वो जो income है, that will get taxed. Okay, people are asking question on the discount rate. Okay, what is the discount rate which we should take First of all, if we are doing a discounting from the liability side, right? Let me write on the board, otherwise people keep on asking this question. If we are doing the discounting from asset side and liability side, right? Incremental borrowing rate to be taken. Right? If we are doing the asset side, RBI or FD, interest rate to be taken. Right? Both is for the similar period of maturity. Maturity and risk. This is the concept of discounting factor. One person is asking, sir, if the discounted have taken 10% on day one, can I change after 2 years? Can I change after 3 years? Answer is no. Discount rate needs to be assessed only on day one. And if the discount rate has been taken, it will not be changed for the remaining part of the year for that particular transaction. Let's say if there is a change in the transaction, modification ho gaya, right? Modification ho gaya, right? So that means a new transaction has arisen, then I will apply entire principles again on a new transaction. Okay, people are asking what is incremental borrowing rate? Incremental borrowing rate is that if I have to take a loan from bank, what is the rate which the bank will give to me? It is possible that if market rate of a market rate of loan is 10%, but since I'm enjoying a very good credit rating in the market, right? I have a very huge businesses. Bank is ready to give me a loan at 9%. So 9% becomes incremental borrowing rate. Are we clear, guys? Are we clear with the journal accounting entries? Are we clear, guys, how these accounting needs to be taken care of in Ind AS financial statement? Yes or no, guys? Any doubt till now since morning? Okay, one person is saying one bank is giving a different rate for the different project, right? Then it's a choice is available to the company, right? If for example, a couple of factors also needs to be taken care of, right? One is if in the past I am taking care of or I am entering into the transaction with, let's say, HDFC Bank, right? But today I'm taking the quote from ICI, right? Why is that so? Right? I need to justify that it may be possible ICI is giving me a lower rate, right? So I can take that rate. It may possible that the HDFC is giving me 8% for project one and 10% for project two, and ICI is giving me 8% for both the project. Then I can take 8% for both the projects, right? It depends. Okay, one person is saying if it instead of 3 years, it is going to be 6 months. Can the management opt not to adopt this as it is not material? Okay, so if it is a short term in nature, if this security deposit is a short term in nature, then there is no need to do this accounting because the impact is immaterial, right? It will be accounted as a current item. And in the notes to accounts, we need to disclose that the amount which is appearing in the financial statement is approximately equal to the fair value, right? So that disclosure needs to be made. In that scenario, there is no need to do this accounting. But if the security deposit generally when security deposit is to be paid, for example electricity, then we are not supposed to do any discounting. But if the security deposit has been given for obtaining the premises on lease, which is always long term in nature or generally on a long term in nature, then we need to adopt this accounting. Okay, Rajat is saying, sir, is discounting rate guidance given in the India standard? Okay, India's discounting rate guidance is not given under any of the standard. This is the practical guidance which I have shared with you. It's not given in any of the 39 accounting standards. Practically, this we follow. Right? Okay, guys, any other doubt? Okay, Rajneesh is saying preference shares classification. So Rajneesh, preference share classification, I will be able to tell you when we will read Ind AS 32. Right? Why Ind AS 32? First, we need to evaluate investment in preference shares from the perspective of the holder. Right? I give you a perspective. Right? There is a concept called compound financial instrument. If I am saying that it is a compound financial instrument, right? What is compound? We will discuss tomorrow. If it is in the nature of compound financial instrument from the perspective of the issuer, then from the perspective of the holder, it will be accounted as FVTPL. If from the perspective of the whole issuer, it is accounted at amortized cost, then I will say it can be recognized at FVTOCI. Right? So there are multiple permutation combination which we need to deal with. Okay, one person is saying, sir, default if the security deposit is forfeited, then what is the treatment? If the security deposit forfeited, it's a pure play loss for you. Charge it to the whatever the amount which was appearing in your balance sheet, charge it directly to P&L. Matter over. Right, guys? So since morning we have discussed lots of things. We have discussed definition, we have talked about financial instrument, we have talked about financial asset, we have talked about financial liability, right? Then we have talked about equity, right? We have built up our definition of what is financial instrument. We have discussed about what are the example, detailed example of financial asset, liability and equity, right? Then we talked about financial asset classification, amortized cost, FVTOCI, FVTPL, right? Then we talked about financial liability, amortized cost, F and FVTPL. After equity, no classification. Then we talked about measurement, initial recognition, fair value, subsequent recognition, as the name of the category suggests. Transaction price, transaction cost, FVTPL के केस में P&L में चार्ज होगी, बाकी सबके केस में it will get capitalized. In case of loan, it will be reduced from the value of loan. Right? And then we took one detailed example how the accounting entries will flow. Right? So this is what we have discussed, guys. And for tomorrow, we will discuss Ind AS 32. We will talk about couple of more questions on Ind AS 109. Then we will talk about Ind AS 32. Then we will talk about the merger of Ind AS 109 and Ind AS 32. That means interrelation between these two standards. And the homework for tomorrow is you need to go through, or I would say you need to mug up whatever we have read since morning with absolute logic, with proper understanding, with proper background, right? And this is the first. Second homework is you need to download annual report of Infosys. Just read 2 pages of financial instrument accounting policy in the standalone financial statement of Infosys, right? Can you do these 2 things for tomorrow? And believe me, guys, by the end of tomorrow, you will gain some sort of good perspective that how to account for financial instrument. Right? Okay, guys, let's wind up the session. And if there is any doubt, we can catch up tomorrow. Thank you so much, guys, for your patience since morning itself. Okay, guys, thank you.